But the mind moves faster. This is not luck, this is discipline. Mind pillar. Take me higher tonight. Do it all, we're chasing the light. Crypto dreams and neon skies. We rise again, we never die.
Alright legends, welcome to another live stream. Remember to smash up that like button. Remember also that this content is for entertainment and educational purposes. I simply share with you how I trade and approach the markets. Have to throw that little disclaimer in there. Let me switch myself on over here. There we go. There we go. What is happening here on the price of Bitcoin? Is there a trade looming around the corner that I'm willing to take? How was yesterday? Did you scratch your dollars from the market? Did you get liquidated? Okay, you know how it goes. Some people get liquidated, some people stay out of the markets like I did. Because yesterday in the community, I did tell the community, I'm not really interested to trade the news. Okay, high impact day. I want price to settle and show me the direction. And I'm basically still in the same trades that I was yesterday when I did the live stream. But now the structure has revealed itself. Okay, the structure has revealed itself. And as per the thumbnail, I have to say, based on the current price action that I see at the moment, the bears have the upper hand. Unfortunately, the bears have the upper hand. Okay, and I'll explain that inside of this live stream, so remember to smash up that like button if you haven't done so already. I'm going to be here for a little while. There's going to be breaks in between, maybe waiting for a little bit of a trading setup, and I will do that live inside of this live stream. Andy is spending his day inside of the community, so he will not do a YouTube update today. So if you don't want to miss out on any of the action, you know where to go. For those of you that don't know, send me the word access to my Telegram and I'll send you the instructions on how you can be part of the community, because when I'm not on YouTube, that is where, and when Andy's not on YouTube, that is where we spend our time. Okay. I need to get the comments, guys. I need to get the comments section. I forgot to get that ready. So let me pop this out. Pop out this chat. Okay. I'll bring it back now. Yeah. I need to chat to the community. I need to see what you guys are up to. Okay. Are you feeling bullish? Are you feeling bearish? I'll do maybe a couple of polls during this live stream as well, guys. It's going to be a relaxing one, okay? Going to take it slow, going to take it easy, no rush, because trading is a game of patience at the end of the day. My brother is actually making me a nice new song about patience, so can't wait for that one to hit my live streams. I think that's going to be absolutely amazing. Did you make money? Yes, Ulifir, that's always the thing that I say, you know, because I think people fall into the trap of who's right and who's wrong, okay? There will always be people that are right some of the time, and there will be people that are wrong some of the time. But as technical traders, we try and get it we try and get it right most of the time, but we will never get it right most of the time. And then you get those people that get satisfaction out of saying that, I told you so. I told you it was going to go down. I told you it was going to go up. But then they get it wrong a couple of times, but they don't say anything. Okay, but then when they write again, they have the big mouth, you know, on the comment sections, big mouth, big mouth. But my question is always, did you make money whether you were right or whether you were wrong? And if you were wrong, did you manage your risk? How little did you lose when you were wrong, and how much did you make when you were right? Because that is what keeps me profitable as a technical trader. When I'm right, I make a lot. Well, enough to keep myself profitable. And when I'm wrong, let me just make this a little bit bigger. Okay, how little can I lose when I'm wrong? And how much can I make when I'm right? Okay, I actually need to update that one. Because yesterday I got stopped out of this long trade, but I did take profits. Okay, and I told the community yesterday as well, I took profits. So I need to go and update that. I need to go and check what the final profit, because I did take 50% profits. Okay, I took literally, I took 50% profits over here. At the high. Okay. Because that was an interesting area that I also highlighted to the community yesterday. It was also the fib from the high to the low of the structure, 0.5 Fibonacci. I knew that there was resistance in that area. News was about to come out. I saw the pump here to the upside. I was like, I think that's a good profit taking area. So I took 50% profits. Price fell down, stopped me out of the long. And then I sent an updated message just to tell the community, do you now see why it's so important to pay yourself as a technical trader? Because if you think you get an amazing entry at a low of a structure, nice beautiful long or a nice beautiful short at the top of the structure, it can stop you out. Okay, it can stop you out. And then you were in profits and now you're like, oh damn, I'm out. Okay. I was in profits and now I have nothing. Or maybe you entered a little bit late. Okay, because it never ceases to amaze me, and I know Andy also speaks about this quite often, is that, and I know you guys know this as well, but it's so interesting that 100 people will take that trade. Okay, we are looking for a trade in this zone because that was the zone that I discussed on Tuesday. I'm looking for a long. There's a high probability for a bounce in this zone. Okay, there's many ways in which you can get into that trade. You can play the breakout of the D-line strategy. You can play the SFP from the daily level. You can play the swing failure pattern from the low, which I did. There's many ways in which you could have gotten into this trade. Okay, D-line breakout. I don't know, guys. You know, you need to have your trading strategy ready. But this was a high probability reversal point over here that I highlighted. Nothing's ever guaranteed, and that's why I have my stop losses in place. That is why I got stopped out at break even with the first attempt at the daily level. Then I took another one and took 50% profits. I need to update that number, and got stopped out. Okay. But most importantly, I got stopped out. Didn't get liquidated, but it never ceases to amaze me that from a high probability setup, okay, 100 people will take this trade. And there's always 3 outcomes. Always. There's always 3 outcomes. Some will make money, some will make nothing, and some will lose. Always 3 outcomes. Any given trade, some people will take the short, some will make money, some will break even, and some will lose money. Okay, and then you can dive into the details as to what did that person do? Well, what did the people do that lost money? What did the people do that broke even? And what did the people do that actually stayed profitable during that trade? Okay, and that is the interesting question, to dissect what happened if you took the short and you did not make money, or if you took the long and you did not make money. You need to go and investigate. You need to journal what happened. Were you fearful? Did you go into heavy? Did you enter, exit, enter? Because I know that's one of the biggest problems that I've seen from technical traders when I do one-on-ones, when I used to do one-on-one sessions with some people, going through their journals with them, trying to figure out what are they doing wrong. One of the key things that I picked up is some people enter, they exit. They enter, it looks like it wants to bounce. No, it looks bearish, and they exit. Oh, it looks like it. So they see on the 1 minute time frame, there's a green candle, they enter. Looks like there's strength. There's a red candle, they exit. They enter and exit the entire position, and eventually when they enter somewhere up here, okay, price runs. That trade basically covers the fees from all the exits and enters, and then they break even with the trade. Okay, that's one example that I can give you that I've seen personally from people's trading journals. Okay, you just pay. And remember, guys, every time you open up a trade, there's a fee. Okay, we all know that. It doesn't matter which exchange you use. Okay, there's a fee when you open up a trade, and there's also a fee when you close the trade. So if you're that type of person that are entering, exiting because you're not sure, it means that you're trading without a plan. You're not executing your plan. Okay, maybe you're going into heavy. So you're too scared to lose money, and that's why you're entering and exiting. And then those little fees that add up blow a little bit of a hole in your account. And then eventually when the trade plays out, you basically pay back the fees. Okay. Anyways, guys, that's just one example. Okay. Anyway, let me continue. I think I'm going to have a lot of ranting sessions today, it seems. Okay, maybe I'm in that mood today where I want to be Pastor Dewald. Right, guys, we're just going to have fun over here. Did you make money? I love that comment. Mr. Willifeed, welcome to the live stream. Morning, Devilton Legends. Good evening, Devilton Legends. Welcome, Wayne, Albert. Hello, Devult Legends. ID Ball, great to see you here. Mr. A Trader, always appreciate the mods in the house. Good afternoon, Legends. Mr. Devilt, hope you're all having a fantastic day. Don't forget to smash up that like button on your way in. As always, much appreciated for you contributing by just simply ticking the like button on your way in. Right, yeah, and also subscribe for future notifications, because this is where I do pure technical analysis. And I must say, guys, myself and Andy, we get it right most of the time, but there are times where we get it wrong, and no one is perfect. But what I do not get wrong, okay, what I do not get wrong is my risk management. And I love that thing that Andy also always says, and I think I'm going to steal that phrase from him, and it's going to be both of us that always say that, is that you are one trade away from a disaster. Okay, and that's what keeps me disciplined. That's what keeps me following my checklist, my risk management, because I know I can be profitable for 6 consecutive months, and one bad trade can wipe it out. Okay, so it's never, for me, it's never the trade. That trade that's going to double or triple my portfolio. No, it's just a trade. It's just another trade of 1,000 trades that I'm going to take. And if I know I'm still going to take 1,000 trades after the trade I take today, and maybe after the trade I take tomorrow, okay, I'm going to go in light, because remember, guys, a little bit adds up. But a big loss is difficult to recover. It's difficult to recover a big loss. I can recover from I would say a 5% loss maximum. I can easily with a good quality setup recover from a 5% loss. 2% even better. 1% easy peasy. I usually trade that back even in the same day. But to recover from a 20%, 10%, 50%, 80% loss, guys, the only way that you can maybe recover from that is revenge trading, and then you typically end up blowing up the account anyways, like, let's go. Hello legends. Hi Devil. I'm always early for this song. Hi Devil. That song is, I'll play that song a couple of times today. I'm going to be here for a while, guys. I'm going to be here for a while. Hi, how are you, man? Another day, another legendary stream. Welcome to the live stream, man. Hey, mate, I think Bulls in danger, as you said. 62,400 is my short target. What do you think, guys? Yes, that's what we need to discuss today. Guys, I'm just having fun here. I'm going through the comments, and then I'm going to dive into the technical analysis. We're going to do a little bit on the 1 hour time frame. Okay, just look at the picture from a little bit further away and see where price can take us on the higher time frames. And then I'm going to zoom back here into the 15-minute time frame and see if there's potentially a trading opportunity that I can even take today, just for fun. Okay. Master, your favorite day for trading? BTC dump. Yes. Statistically, Thursdays are my most profitable trading days. Okay, like smashed. How can we get access to the music you have playing? Unfortunately, you can't, but if you are inside of the community, I can send you the MP3. Okay. Technicals before fundamentals. It is, yes. I'm a technical trader, and from what I've seen based on past experience, technicals supersede fundamentals. Unless, there's a big but, you're an inside trader. Then fundamentals will exceed technicals. Guys, but it's, okay, it's the cream of the cream of the cream of the cream of the crop that has that type of information. So from an institution perspective, okay, maybe that's where the insider trading flourishes. We know that there's manipulation, whatever the case might be. Usually the big players sell before the dump happens, they buy before the pump happens. We know, we all know that this happens. It's not been proven, and I mean, anyways, I'm not going to dive into that gravy train. But from a realistic perspective, okay, for the average Joe like myself and you and everyone watching this live stream, for me, technicals is more important than fundamentals, because I'm already positioned in a trade before the news comes out. If you're an inside trader, then obviously you know about the news before it comes out. Okay, that's the difference. But I mean, I'm not gonna do fundamental trading, given the fact that I don't have that type of connections. Okay. Right, go pay yourself. Yes, happened to me all the time, in and out. Okay, John Jones. I'm sure there's a lot of you that can relate to this. Okay, I'm sure there's a lot of you that can relate to this. How often maybe you're an experienced seasoned trader now, or maybe you are new at the moment. But I can tell you now, there's very, very, very few people that started trading that hasn't done that. You in and out, in and out. Is it going to bounce? Is it not going to bounce? You exit, you enter, you exit, you enter. And before you know it, you've spent 5-10% of your entire portfolio just on trading fees. Okay, because you're trading without a plan. I used to do that, guys. I know I'm genuinely speaking from experience. I don't think that there's a mistake that any technical trader, including yourself, has made that I have not made. And this is why I can relate to these things. This is why I can highlight these things, because I often, when I think back about my trading journey, I often thought to myself, maybe the reason, okay, hindsight is always beautiful to reflect back, is to say that maybe I had to learn the hardest way to make this successful, so that one day I can be here, okay, and share with everyone not to repeat the same mistakes that I've done, that I've made, because I've been there. I've done it. I think it's very difficult for someone to tell someone else not to do something if they haven't experienced it themselves. Okay? Simple example is, if you've never touched a cigarette in your life, or a cigar, or you've never smoked tobacco, and then you want to tell someone that they need to stop smoking, you cannot relate and you cannot tell that person, because you have no idea what that person is going through, for example. But if you've been a smoker for 20 years and then you left it, I think then you become a role model for people that do smoke to stop smoking, because you've been there, you've done it, you've gone through the cold turkey and the withdrawal symptoms. You can relate, you can tell them. So that's something that I truly believe in, is that I'm telling you these things from a trading perspective because I've been there, I've done it, I've made those mistakes. And you can overcome those mistakes. You can master yourself so that you can manage those emotions. So what is the sideways scenario count? We're going to go through that now. A little bit of boring price action here at the moment, but we're going to go through some higher time frame and basically going to do a recap of what I discussed yesterday. Guys, the reason I'm spending a lot of time, okay, and I might have to say this a couple of times, because some people is like, just get to the point, get to the technical analysis. I'm taking it relaxed today. I'm going to be here for a while. I'm going to spend a lot of times in the comment section. If you have any questions, let me know. We can go and find the answer together. If I don't know, I have ChatGPT. Yeah, I have Gemini on my computer. Sometimes it does surprise me, the type of questions that people ask sometimes. And I'm just like, do you not have Google? Like, that is a question that Google could typically answer for you. So, I'm always that type of person that if I don't know, then I'll ask Google. And if Google doesn't know, I'll ask Gemini. And if Gemini doesn't know, I'll ask ChatGPT. And if none of them knows, I will find out from those AI tools who can tell me. Okay, where can I find that information? Right, much love. I'm on the bull side. Okay, we're going to discuss the probabilities for the bull side. I am medium-term bullish, guys. I think purely from a technical perspective. On a medium-term perspective, okay, I am bullish. So, but on the short term, I'm bearish. Okay, hi, good morning. Yo, Devil back from the vacation, ready for trading. Happy to see you and Andy again. Yes. Okay, how likely do you think the low is in? We can go and discuss that in a moment. Can be a flat B. Yeah. So please answer my query. Once price starts moving in your favor, you exit 10, 50, so out. No, I don't have a percentage. Yes, Sudhar, I get this question so many times. I think people want a scientific answer for this question. They want to know that if I play a swing failure pattern, let's say from this high, from the weekly level, there was a weekly level, nice, beautiful SFP from the high. Okay. From a percentage perspective, where do I cover my fees? From a percentage perspective, where do I cover my stop loss? No, I don't trade like that. I eyeball it. And it might sound stupid, it might sound dumb, but I eyeball it. Because on the exchange, it tells me, you can't see it now because I've got already 2 trades running in profits, but when you open up a trade, okay, you will have the P&L that's either going to be red or green depending on whether price is moving in your favor or not. And then this little realized P&L will show you the fee that you have paid to open up the trade. So it will always be red. almost every single time when you open up a trade, this is going to be your realized P&L is going to be red, because that's the fee that got deducted from your that's going to get deducted from your account once you close that trade. Okay, once price moves in my favor and I see I have enough profits to cover the fees and have enough left to run, I take some. Then I move my stop loss, and I can, for example, say, okay, well, my stop loss is, let's say my stop loss is over there. My stop loss is $1,400. So when I've made about $3,000, more or less double that, more or less, okay, it needs to be more because I still need a position to run. I can't have $1,400 profit because that means I have to close the position just to cover the stop loss. No. I want price to move a little bit further in my favor, and if I have $3,000, then I can take 50% off the table and it will cover my stop loss, and then I still have 50% of the position to run. So the simple answer is it's not scientific. There's no percentages. I literally eyeball it on the exchange. How much is the fees? How much profits do I have? Can I take some? Yes, no, and I make the decision. That is how I do it, guys. It's as simple as that. And I get that question many times, especially on my private messages. Okay. A lot of people ask me that question. Dewald, how much percent does the price need to move before you take profits for fees? How much percent does no, I eyeball it. The exchange tells me how much money I've made, and the exchange tells me how much my stop loss is. It tells me how much my profit is. I can see what the hell is going on. I don't need percentages. Okay. Right, so now that I am here on my Bluffin account, okay, you all know why. For those of you that did watch the live stream yesterday, I did this live in the live stream, this entry. Okay, if you've never seen me speaking about this, you might be wondering, how on earth did you get into this short if price didn't even hit that level? Well, okay, just for a little bit of clarification, this short was over here. And yesterday, based on the structure that I discussed to the downside, I said there's a high probability that if price is going to continue to the downside, it should not take this high. So I want to maximize profit, so I added 70% to this position, so that I can still have a free trade to the downside, okay, and make more money instead of just leaving my entry here, because now I also know that there's a high probability that if price does take this high, it's most likely going to take that high as well. So let's maximize some profits. That was my thinking from yesterday, and so far it's paying off. I'm making more money now to the downside. Okay, and I'll share with you now today where I'm going to take, if the short plays out, where I'm going to take the rest of the profits. Okay, obviously I'm still positioned in the long as well, so it's great to be hedged in where price is at the moment, literally in smack bang in the middle of the two entries that I have. Okay, literally I am in a short and I am in a long, and price is in the middle. So it doesn't matter which way it goes, I'll be making money. And both trades are in profits. So I share this inside of the community, how I execute these trades, when I execute these trades, because I can't always be on YouTube. And I do that to show people how I do it. Or how I can only show how I do it from an education and entertainment perspective, but mostly from an education perspective. Okay, if you want to be part of the community, you can send me the word access, just to keep it simple. You can send this word to my Telegram, and I'll send you the instructions on how you can be part of the community. Because, guys, I can't always be on, excuse me. Yes, myself and Andy do sometimes, we do these long marathon live streams, but I can't always be on YouTube. Okay, last night I updated the community. I told the community I'm not going to take any trades during the news. And I was out for the evening, but I still posted some updates in terms of new structures that could play out. And now today, Andy is spending his day inside of the community, so there's no YouTube live stream from Andy today. Okay, now, I feel like I've only been educating, so let's do a little bit of technical analysis. Obviously, I'm going to take that order block out. I want to get some levels ready, guys. Okay, let's start at the beginning. Let's start at the meninging. Okay, that 30-minute, I want to go to the 30-minute. That order block has been claimed. Can you guys see that 30-minute order block has been claimed? So I'm removing it. 1 hour order block still not claimed. If I go to the 1 hour time frame, you'll see there's a 1 hour order block, and then here is a 2 hour order block. So let me open up the 2 hour time frame. There's a 2 hour order block, a little bit slightly above, and I want to see if there's anything new. I want to go to the 1 hour. Getting everything ready takes time, you know, like with business, you have to put in the time. Ooh, this is where price got the bounce. Okay, a 30-minute order block. Can you guys see there's a 30-minute order block here where price got the bounce? Let me just grab my little box. Okay, this is where price is currently getting supported, is at the 30-minute order block. Okay, this is the daily order block. It's already been claimed, so I'm going to remove that one. So there's a 30-minute order block. Let's go to the 15-minute time frame. $10-minute. Generally, what I've noticed is the smaller the time frame you find the order block, the less effective they become. The larger the time frame order block, the more effective they become. So although sometimes I do jump into the 5-minute and 1 minute to try and find order blocks, it's the 15-minute and above that I pay more attention to. Okay. So I'm not going to go down lower than that, but I can see that there's some 10-minute support over here as well. But I think I can pick that up just by simply doing a little range over here. Okay, there's a little point of control where the highest amount of volume was traded. Okay. So I want to go to, now that I've got my order blocks, I just want to extend these ones at the top. So if price gets there, I can still see them. Okay, make them the same length, make this one the same length. Guys, I'm a little bit of a perfectionist when it comes to trading. You'll always see me use magnets, get everything precise, because it's a precision game. Okay, trading for me is a precision game, especially when I'm trading swing failure patterns. My levels needs to be exactly where they need to be. Okay, now I want to start off with the daily levels. I want to see if there's any fresh daily levels that I can take into consideration. I want to switch on my daily levels. There we go. No, that one has been claimed. That one has been claimed. That one has been claimed. And if price continues to move to the upside, there will be a daily level tomorrow morning over here. If price closes above. Okay, if price falls down, no daily level. Okay, so no daily levels, guys. Ladies and gentlemen, there is no daily levels. Okay, now I'm going to look for some point of controls here on the 1 hour time frame. Session volume profile. There's nothing. There's no point of controls. The only one that was here got the bounce and price fell down. Okay. There's nothing here. Let me go to the 15-minute just to make sure. No point of controls. Okay. Let me just make sure that I delete this one. Okay. Ka-ching. So no point of control. So there's not a lot of levels. Okay. The only thing we really have is order blocks, areas of resistance. Okay. Right, so I want to discuss quickly the bullish and bearish case scenarios. Okay, I just want to see what I did do here. Okay, that's basically what I discussed yesterday. So I can see, I just want to highlight this. I'm just taking you through my thinking. I can see a 5-wave structure to the downside. Okay. And this is now where it becomes dangerous, and this is why I put on the thumbnail, Bitcoin is in danger, or the bulls at least are in danger, because this move is a 3-wave structure, and this move is a 5-wave structure. Momentum continues in the direction of the 5-wave structures. And the 5-wave structure is to the downside, and the 3-wave structure is to the upside, which means 3-wave structures are corrective structures. They're correcting the impulse and then they continue in that direction. So there's a higher probability based on what I'm seeing here at the moment, and the 3-wave structure here to the upside and the 5-wave structure to the downside, there's a higher probability for price to take out that low before it takes out the high, regardless of what happens here. Is what it is, right? Nothing is ever guaranteed. I'm just saying based on current price action, there's a higher probability to take out the low before the high gets taken. So now that makes me interested in shorts. Is if I can see an A, B, C, or even a, okay, that could now, okay, let me start simple. Let me start simple. If I can see a 3-wave structure to the upside after the 5-wave move down, shorts become very interesting, especially if the low has not been claimed just as yet. I was not interested to trade anything yesterday because I don't trade news. I don't like to trade news. You often get wicked out and price moves in the direction anyways because of the massive volatility and the market absorbing the news. I like to stay out of the market. Next day, I will come back, assess and see, well, what is cooking. Okay. So obviously, I'm interested always in longs and shorts, depending on what price gives me. But when I see a 5-wave move down and I see a 3-wave move up, I know that price can fall. From here or from there. Anywhere in this zone, price can fall. So it's in my best interest to start looking for shorts if I'm not in a short yet, for example. Corrective structures can be complex and they can be difficult to analyze. Okay, the easiest short from a structural perspective was this short at the 0.5. But because I don't trade the news, I didn't take the short. But I did take profits from my long. And usually when I take profits from my long, you know, it's that little hint. The only reason I would be considering taking profits from a long trade is if price is hitting resistance. That automatically becomes a shorting opportunity. I didn't take it, but I did see some community members took that short. So well done. I hope you paid yourself, position protected, you know the drill. Okay. Now the question is, either price falls directly from here and then I'll share with you where I'm interested in the long. Because now I'm obviously going to benefit from the short. Okay, I'm going to benefit from this short. And there's a high chance to get stopped out of this long. And I don't mind because I've taken majority of the profits already. I've taken a big chunk of profits from this long already. But if in a low probable scenario, price does reverse here and take out the highs, I'm going to make money from the long and I'll get stopped out of the short. So that's the beauty about being hedged here at the moment. Right, legends, if I do jump into a new trade and I'm not on YouTube, I will share that inside of the community as always. And right, if you want to be part of the community, send me the word access and I'll send you the instructions on how you can be part of the community. Okay, now the question is, I don't know if it's going to continue. I want to look at CVD to see, well, is there a chance for a little bit of a bounce and maybe a larger corrective structure, because that's now what I want to discuss next. Okay, there's two confirmations for bullish CVD. So there's a good chance that even if price takes the low, there's a good chance for a bounce. Okay, so that brings me to another scenario. When there's a 3-wave structure to the upside, it can either be done and price falls. Okay, this is what I highlighted last night in the community. The minimum requirement for that high Okay, and this was very interesting as price, community members, you know the update from yesterday, as price was climbing here to the upside over here, I said it's not time to short. It's not time. Okay, listen to the words. It's not time to short yet for me. Okay, now I need to be a little bit more specific. If I take a time fib from the high to the low of the structure, okay, it is extremely high probability that after a 5-wave impulse, either to the down or to the upside, doesn't matter, that the corrective structure finishes after the 0.382. That's the minimum requirement. And then it can extend even until it gets to the 1 or even the 2 extension. It can even go to the 2 extension. You can have a larger corrective structure and then price falls down. That's perfectly fine. Okay. So yesterday in the community, you can see as price, okay, let me zoom in here, was pumping here to the upside. I said, it's not time. I think this is where I did the post. I said, it's not time for me to look for shorts. But then that high was made after the 0.382, which is the minimum requirement. Now shorts becomes interesting. And that's why I also saw some legends jumped into that short because they knew the high was made after the 0.382 high impact news, 0.5 Fibonacci, SFP from the level. It was a good shorting zone. Okay. Now, because this high was made after the 0.382, there is a chance that price can continue to the downside. It can fall. Okay. And this is why I added to my short position from the highs. Okay. This is the reason I added to that short, because I knew that there's a chance for price to come and eat up these lows. It can get really nasty here to the downside. Okay, $61,000, definitely a possibility. $59,000, also a possibility. Okay, so I will dive into the 1 hour time frame and then maybe we need to discuss those scenarios. Okay, so I'm going to get back here to the smaller time frames as price takes the little dumpy here to the downside. The only long that I will consider at the moment is that I know that this corrective structure could be finished, but it can also be forming something larger. So that could be a wave A. Okay, so there's a chance for price to sweep the lows and bounce back up. In a flat, it forms a B. Okay, it forms a B, which has an invalidation, and it goes up and it rejects above. Those are the two zones that I'm interested in the short, if it does reverse here. So this is a longing opportunity. This is still a shorting opportunity because price can form a larger A, B, C after the 1-to-1 extension, which is perfectly fine, then only fall to the downside. But I just want to highlight the risk for this long. This is a very dangerous long if you don't know what you are doing, because this corrective structure could be finished and price just continues and it doesn't stop. So there's no limit order trade here for me. No. I know that this is a very risky trade. Preferably, I would actually like to stay out of it. I would actually prefer to stay out of this trade if it does take the lows, because I know this is a risky trade. And I told yesterday, do you guys remember when I did the live stream last night or yesterday morning? I said that if price, okay, these were my words, if price falls down before it claims the 0.382, this for me becomes a high probability long. Price claimed the 0.382 and now it's falling down. So the high probability long is not a high probability anymore, because now I know price can continue. There's a higher chance for price to continue because of that high. So guys, I know this is very technical. You might be thinking to yourself, holy shit, he looks at time fib, he looks at that, he looks at the structure. But, you know, for me, this is the work that I need to put in to determine whether a long or a short is a high probability or a low probability trade. For me, this was a high probability. volume decreasing. I mean, it's just, it ticked all the boxes so nicely. Okay. You have the clear 1, 2, you have the 3 with the most amount of volume, and as price was falling here to the downside, volume was decreasing, increasing the probabilities for a 1, 2, 3, 4, 5 to at least see a corrective structure back to the upside, which price did. Created that corrective structure to the upside, and now it looks like it wants to fall. Remember what I said, guys, okay, because you will remember, for those of you that did watch the live streams, I said this for me is a high probability long, but I don't know if it's going to do this and fall down, or if it's going to form a 5-wave structure, 1, 2, 3, 4, 5, correction, and continue back to the upside. I don't know what it's going to do, but it's about trade management. It's about how I'm managing my trade, and this is why I took 50% profits from my trade. The long that I entered, yeah, I took 50% over here because I didn't know what it was going to do, and now price is flirting with the lows again. And it's formed a 3-wave structure to the upside, increasing the probabilities to take the low again. So I'm glad I took profits. I'm really glad I took profits, because there's no 4 and 5. There's no 4 and 5. Not looking great for the bulls. Remember, you need 5 waves in a certain direction to at least open up the door for price to continue in that direction. When price moves up in a 3-wave structure, guys, I don't know, I sound like a broken telephone, but I know there's a lot of new people watching as well, and some people just need that little bit of repetition so that it can sink in. When there's a 3-wave structure to the upside, it always increases the probabilities to take the low at some point, even if it wants to turn around and bounce, then fall to the downside. But then I will look at the entire structure as corrective. It's correcting the impulse. Whatever happens here, and corrective structures can morph into very complex corrective structures, and they're not always easy to trade. Okay, so before price gets there, where will I consider this long? If this is a way, so basically what I'm trying to speculate on now is to say that, well, this can be an A. A price forms a B and it goes back up for a C. That's one scenario. There's many scenarios because corrective structures are absolutely insane. Okay, let's take the time fib out the way. Now, for me to consider this long, there's very specific levels for a B flat. A B flat has very specific levels, and it has an invalidation, which usually gives people an idea of where to stop looking for the trade or where to put their stop loss, depending on how you trade it. Okay, because you take your trend base fib extension, and here again, I go with my magnets. I snap it onto the low. I snap it onto the high of ABC. Okay. And then these targets to the downside is flat territory for your B wave, of which the 0.9 has already been tapped. Okay, that is where B needs to bounce. And I know it's a big zone, guys. I know, but what I usually do is I go and try and figure out or see if I have other areas of confluence with these levels. Do I have a daily level there? Do I have point of controls? Is there something that I can find that has confluence? Or if I can't find anything, I can use it as swing failure lines. So price dips below, gets acceptance back above. That's my entry. That's my stop loss. And I can do that. Yeah, I can do that. Yeah. But because it's not a high probability trade for me, I will most likely go in way lighter if I do see a reaction that I like to trade. So if I do see a reaction at one of these levels, I will go in lighter because of the probabilities of what I've just explained. There's a chance for price to fall to the downside. Okay. Remember, B waves has to be 3-wave structures. Okay. A B wave has to be a 3-wave structure. So it does fit the characteristic of a 3-wave structure for now. And then your C wave has to be a 5-wave impulse to the upside. And that's, that's where it gets a little bit confusing. Yeah, there's an impulse. There's 5 waves here to the upside. Okay. 1, 2, 3, 4, 5. Okay. not considering that structure. You have to consider when that formed, what is that? You have to link it to the previous structures. Okay. Anyways, guys, it's currently getting the SFP from the 0.9 as well, but it's not really a level where I want to long because it's already been tapped. So if a level has been tapped this many times, I'm not really interested to long that level. So the only long that I will take, okay, is from here. Even consider, if it wants to bounce from here, then I'll look for the short. I don't care. I'm not going to take this long trade. Okay, it obviously lost the 30-minute order block, so I'm going to take that out the way. Right, legends, I just need a bit of a cheers. Now that is typically the reaction that I like to see for a long trade. I love those reactions because I know exactly where to put my stop loss. It's getting strength above the level. Guys, I'm not trading this, okay? I'm just sharing with you what I would like to see. I would like to see that, what's happening at the moment, happen, yeah, not there. If it bounces, it bounces. I'm not interested in that long trade because it's been bouncing on this level many times, and the more the price bounces on a specific level, it makes it weaker, so there's a higher chance for price to break down. So I don't want to expose my cash to risk. No, I don't want to. Okay. Right. I can be picky about how I want to trade, and I can be picky about what I want to trade and how much I want to trade. It's my money at the end of the day, and I'm not interested in this trade. Okay, but please, guys, follow your own plan, and that's something that I often tell the community as well. Don't wait for me to take a trade and share it inside of the community. Because sometimes there are trading ideas and analysis that myself and Andy shares, and we are not in front of our computers. Maybe we are at the gym. Maybe I'm busy having dinner with my family. Maybe I'm in the bath drowning in bubbles or something, you know. There's going to be opportunities that I miss, and I do miss a lot of opportunities, but it's about following your plan, okay? It's about following your plan. And then some people will sometimes send me messages to say that, well, Dewald, I didn't take the trade because you didn't take it. I was just like, ooh, okay, you still need to walk a path, okay? Because you need to build up that confidence to execute your own plan. And if you're going to wait for me before you take a trade, you're most probably not ready to trade just as yet. Okay, but I do share, when I do enter a trade inside of the community, areas of interest, people actually often trade our plans, myself and Andy's plans, and then we miss the trades and other people jumped into the trade based on their plans, you know, aligning it with their analysis as well. And by the way, I have seen that the most successful traders in our community is traders that take our analysis, they combine it with their analysis, and they make a trading decision. Those are the most successful people inside of the community. If you are dependent on an influencer to give you a signal before you can enter the trade, you should most probably not trade. And if you do, with a very little capital, because it means you don't have a plan. And it means you're most probably going to get yourself in trouble if things go south. Okay, sorry guys, you know, I want everyone to be successful, so I will always hammer on these little psychology nuggets and risk management nuggets. Okay, and I know a lot of you watching the stream right now, I've said this a million times, and I will keep on saying it going into the future. Okay, you have no business trading a signal from someone else if you don't know why they are entering that trade. If you do not know where their risk management is, and if you do not know where to take profits, and if you don't understand the strategy that they are using, the rules associated with that strategy. And this is why signals channels are not profitable for the person belonging to the signals channel. It's profitable for the person that owns the signals channel. Okay. I think the difference between people's signals channel, because there's many signals channels out there, guys. I think the difference between our community and signals channels is that I genuinely want each and every person inside of our community to succeed. Because your success is myself and Andy's success. It means that you are going to stay in the community. It means that you are going to be profitable consistently, month after month, year after year. Okay, that's the yeah. I just want you guys to succeed, because your success is our success. There's no success if people get liquidated. Okay, because that creates people entering the community, leaving bad reviews. Like there's just, for me, there's no benefit in signals, because it just leaves people upset, devastated, lost their income. This is why myself and Andy focus on education. Anyways, guys, I'm going to do, it seems that I'm in that mood today. I'm going to do a lot of ranting sessions. Okay. Just want to upgrade this B scenario. So that's basically the long that I'm looking for, in a nutshell. But make no mistake, this 0.618 is the invalidation for this scenario. Invalidation. This B most commonly does not tap the 1.618. It finds support in the green box. So, which is beautiful, because a flat corrective structure is designed to reset the market. It grabs the liquidity from all the longs that did not take profit. Okay. And then when it falls, guess what? People are going to start shorting. Oh shit, it's losing the low, and they start shorting. Where do they put their stop losses? Above this high and above that high. So the B wipes out the longs, it wipes out the shorts, and then it falls. So flat corrective structures are specifically designed to reset the liquidity around a specific structure. How often, okay, have you seen, and this is where the faker, I've heard people say that it just came for my stop loss and then it moved in the direction that I wanted it to move. Okay, can you imagine? You maybe you played the breakout. Okay, maybe you played the breakout. Maybe you played the SFP. Whatever, however you got into this trade, you entered the trade. Price moved up. Okay, you didn't take profits. Okay, it does that and it moves up, and you're like, oh man, you see, it just came to stop me out, and now it's leaving without me. That is a flat corrective structure. They are specifically designed to do that, and this is why I love to play SFPs, because SFP, swing failure patterns, does that. It grabs the liquidity above a high or a low, and then it continues in the desired direction. So it's liquidity. It's basically a liquidity grab strategy. It grabs liquidity and it reverses back again to the up or to the downside. Okay, so that's one long that I will be looking for over here. I must say, guys, I am more interested in the short or the long further down. I might attempt this long if price gets there, if it happens during this live stream, just for fun. Okay, maybe I can show people how I trade a swing failure pattern. Even if I get stopped out, there will be some, okay, this is typically how I do it. Okay, you got stopped out, whatever the case might be. Just from an education perspective, I'll show people how I do it. Maybe I can, move my exchange to the left or the right and do a double screen and show you how I execute a swing failure pattern. But the long that I'm more interested in is a little bit further down. So, but now that I've highlighted this potential B, okay, remember guys, this B can bounce here. It can. It's allowed to. It's just not a trade that I want to take. Okay. I would prefer, because the 0.9 got smacked so many times, for it to go and grab the liquidity below the lows. That's my preference. So now what I want to discuss now is let's throw this in a folder. ABC local, ABC flat scenario. Okay, let me throw this in there so I don't have to redo all of this. Okay, now nice and clean. There we go. I quickly want to jump into the 1 hour time frame. Daily levels are very far away. There's no daily levels inside of this zone. Do I have any point of controls inside of the zone? Nope. Do I have any weekly levels inside of this zone? Where's the weekly levels? Here we go. Ooh, wait. Price is at the moment at a weekly level. Yeah, but that was the weekly level from Tuesday that got tapped. Okay, so I can take that out the way. I don't need that anymore. So not a lot happening here from a levels perspective. Okay, daily, weekly, naked point of controls, not much happening over here. So the one scenario that I'm still keeping an eye on, which is basically my favorite scenario, it might not necessarily be the primary scenario from a technical perspective, but it's my favorite scenario. And based on the three-wave structure here to the upside, I must actually say it's becoming a primary scenario from a technical perspective as well. Where did I save you? I think it's this one. Here we go. Now I like this scenario. So the most interesting trade, guys, because I know we can scalp the smaller time frames. You can short, you can long, you can trade this range, right? You can trade that. Price goes up, you short, price goes down. But this is the high probable trade. That is the trade that I'm waiting for. For me, this is a high probability trade. Just like the short was a high probability short. Just like the long was a high probability long. This is why I'm long over here and I'm short over here, and now price is in the middle of those two. Okay, price is now in the middle. I'm long and short at the moment. But the trade that I'm really interested in, the next trade I want to take on my Bluffin account is this one. That for me is a high probability trade. But it would also depend on how price gets there. Because if price starts falling here to the downside, I want to see how price gets there. And then I will make a trading decision in this zone. Okay, price has basically formed a three-wave structure in a W, a three-wave structure in a X, and it needs to form a three-wave structure to complete the Y wave. Now, because locally you have a three-wave move up, which means that there's a high chance to at least claim those lows, which means that there's a high chance to still move down. Okay. I think the bulls are really going to have to pull a rabbit out of the hat for price to form a higher low and continue back to the upside based on that three-wave structure. Okay, the only way that I see a possibility for the bulls over here is, I would say this scenario carries most probably the highest probability at the moment for price to take the low at for $62,000, 400, 300 to take these lows. And then I'm going to be looking for a new long, and definitely I will share that inside of the community. There's a lot happening there. There's a weekly level, there's a weekly point of control. It's the 786. I must say I am very interested in $59,000, 500. I'm not so interested here, but I will still pay attention because I don't want to miss it if it does bounce and it doesn't reach my level. Okay, because what I would like to see on the higher time frame, if I zoom into this structure, I know it's a little bit messy, so let me put it off. Okay, let's clean up the kitchen, as I'd like to say. Let's do a fixed range profile for this entire zone. Now you can see where the most amount of volume was traded. You basically see the structure. Okay, so for the bears, this is great. Price failed to break above the range. Price is below the point of control, highest amount of volume, which means there's an increased probability for price to come back down to the value area low. So I don't even have to do Elliott wave analysis. I can just look at price and see where it is and tell you, okay, based on where price is inside of this range, there's a higher probability to come down here. Unfortunately, for the bears, this looks great. For the bulls, this looks horrible. Okay, price failed to break out, and now it's failing to get acceptance back above. It usually, when price struggles to get out of the value area high, which is the blue line, okay, the hope for the bulls is that the point of control will hold and it will try again to break out, but it didn't. It failed miserably, and now it's trading below the highest volume area. And can you see where price is consolidating at the moment? Look at that high volume node. That is where price is consolidating at the moment. So you can see how important these little high volume nodes are. It was also because of this high volume node that I was interested in that long. Okay. Right. So let's keep it simple. What I would like to see, if I just keep it simple, FIB from the low to the high of the structure. Okay, let's make the lines thick so everyone can see it. There we go. Remember, I said I'm very interested in the 0.786. And the reason I'm very interested in the 0.786 is because I know from what I've seen on social media, on X, almost everywhere, YouTube influencers, okay, they are very interested in that zone. It's the golden pocket, it's the value area low. Yes, technically it's a great level. But I've learned, and I know the community members know this as well, when there's a level like that, where everyone is cock-a-notching, you know, cuckoo-luring that little level, they want to long over there, the market loves to do two things. It either front runs it, or it scares the crap out of everyone. Oh shit, no, it's going further. And I think the scare the crap out of everyone is the one that makes the most sense for me because of all the liquidity below this low. It would be silly for market makers, and this is just my theory, guys, it would be silly for market makers, okay, to do that without grabbing the biggest piece of liquidity first to the downside. If most of the liquidity is below the lows that was created, you can see it chops, it chops, it chops, it chops, it chops, it chops. Where does liquidity lie? Underneath these lows. So if I was a market maker, I would say, let's go grab all of it. Let's stop all those longs out. We clean it out, okay? We wreck them. I want to see a liquidation event where there's news to say that 10 billion in liquidations. I want to see that, okay? Let's go and stop all of them out, and then we create the deviation below the value area low. Because usually when price is below the value area low, people are extremely bearish. And when price was here, people were extremely bullish. So I love to trade against sentiment because it's also, this is where retail longs and this is where retail shit their pants. So I might not get exactly what I want, but I'm trying to tell a story over here. Okay, I'm trying to tell the story of there's a chance for price to come down here. Technically, it makes sense. There's a scenario that supports a WXY, 3-wave, 3-wave, 3-wave to the downside. There's a weekly level. There's a naked point of control. It's a deviation below the range. Just like you get the deviation above, you get the deviation below. Price gets acceptance back above. Okay, some people will actually trade it like this. They will enter here, as price gets acceptance back inside of the range, so they know where their stop loss is and they're targeting the highs, and that's a swing trader mentality. So they will be, even if I missed the low, like, I got into the short over there and I got into the long over here, even if I miss the beautiful SFP, I'm going to get into that trade somehow. Maybe I'm sleeping and I can't enter it from a SFP perspective, and then I can use the D-line strategy, okay? Or I can use the range strategy where price gets acceptance back inside the range, and I'll use less capital because I have a wider stop loss. But it is the potential for a bounce to claim the highs is good. Never a guarantee, and this is why my stop loss needs to be in place. Okay, so just telling a little bit of a story of what I would like to see. And there's an Elliott wave scenario that supports it. There's liquidity that supports it. And there's a clue that supports it as well. Okay, I feel like I have been talking a lot and I need to go through some comments. Okay, but I've now told my story. Remember to smash that like button if you do enjoy the content. Remember, if I'm not on YouTube, I spend my time inside of the community. And obviously, guys, I don't know if I'm going to be on YouTube over here, if price gets there. But if I can tell you guys now, if price is here and I'm awake, I will definitely do a private live stream inside of the community. I want to catch that trade. I'm going to be very interested in that trade. I will do a private live stream. Based on I have to be awake, obviously, and even if I'm not awake, let's just say it SFP is the daily level while I'm sleeping or diving in a bubble bath, whatever the case might be, and price is I'm going to find a way to get into that trade responsibly. Okay. I have to highlight the worst case scenario as well. And I would actually prefer even more so for the worst case scenario to play out. I know that there's a high chance for price to bounce here. And maybe before I discuss the worst case scenario, let me go through some comments, because otherwise I'm going to forget. Then I'm going to take a break and I'll be back. Guys, I'm still going to be here for a while, okay? Right. Woo, lots of comments. I've always wondered, what kind of volume does it take for market makers to create liquidation events? It takes a lot of volume, okay? You can see, let's go here to daily time frame. We can start with the daily time frame. You can see the liquidation events, okay? Do you see? I can see it, yeah, look at that. I often speak about these high volume candles because when price did that, and when price did that, I said in my live streams, after a high volume candle like that on the larger time frames, it usually signifies the end of something and the beginning of something new, and price moved up. When price did that, price moved up. Yes, it literally just swept the lows. There's no breakdown there. Price didn't capitulate to the downside, but that usually signifies the end of something and the beginning of something new. For the bulls, you're hoping for the beginning to be a bullish structure to the upside. This is a three-wave structure and continuation to the downside, but at least it's stopped. So if price falls here, okay, with higher volume, it doesn't have to be that high, because I think you will only get this type of volume, okay? You will only get that type of volume if price sweeps the low. But if it doesn't sweep the low, I'm expecting high volume, but not as high as this. Okay, but I will talk about that scenario where price sweeps the low. I will talk about that. 4 hour, let's go back here. Right, guys, remember, this is where I only do pure technical analysis. I have no bias from a personal perspective in terms of I'm feeling bullish today, therefore I'm looking for longs. Or I'm feeling bearish and therefore I'm looking for shorts. No, I trade the opportunity in front of me. I sit in front of my computer, I do my levels, I do my analysis, and based on what the structure is showing me, it will give me directional bias for the morning, for the afternoon, or the evening, because I can long in the morning and I can short in the afternoon. And play another long in the evening. You know, I trade the structures, guys. I don't care whether people are bullish or whether people are bearish. I trade the structure in front of me. And that is what keeps me consistently profitable as a trader. Okay, these are the trades that I've taken since the 1st of July up until the 11th of August. I need to just update that one. There's a little bit more profits I need to put in there. And you can see that I do take losses. Okay, I'm not perfect. I do take losses, but what you will notice is that I keep my losses small. I try my best because that's my job. My job as a technical trader is not to see how much money I can make. My job as a technical trader is to see how little can I lose. Because the winning trades will automatically turn into big trades if I'm managing my risk like a pro. Okay. And if you want to be part of the community, you can send me the word access to my Telegram and I'll send you the instructions on how you can be part of the community. Okay. And then I'm going to also go through a little bit of detail after the break. And let me go through some more comments and then I'm going to take a quick 5-minute break or 3-minute break. I'll see. Okay. There's a 3-day level. VSVP, I know there's a 3-day levels. I don't use them. Okay. For me, based on my trading strategies, I have found the most effective levels is the naked point of control, the weekly levels, the weekly point of controls, naked, and daily level. Daily, weekly, obviously the naked point of controls for those two as well. And those are basically monthly levels are the ones that I pay attention to. I know some technical traders go into the 3-day chart. They go into the monthly, the 3-month chart, the 6-month chart. You know, I don't need that. I don't need so many levels to stay profitable. I don't need that. So for me, I also have that theory of less is more. Because I also used to have the daily open, the daily close, like many guys, there's just levels everywhere. Okay, it's just levels everywhere. And then I realized, okay, based on my trading strategy and the high probability trades together with Elliott wave theory, my D-line strategy, swing failure patterns, these are the levels that I like. And I've just narrowed them down. Otherwise, your chart is going to look like an absolute spaghetti mess. Okay, you're going to have levels everywhere. And you're not going to know which one to trade. So it's just my preference. I'm not saying there's anything wrong. Mr. VSVP, I'm not saying there's anything wrong with a 3-day level. Okay, I'm not saying there's anything wrong with that. I'm just saying I don't like to trade them. Dewald, I want to thank you for all the advice you are giving. You have no idea how precious you are for the trading community. Thanks, Vincent. I really appreciate that. Always great to see comments like this. Much love, much love. I really appreciate that. I've always wondered what kind of volume. Okay, I've gone through Dewald. If you can answer, would appreciate if you can tell me what tool you've currently got on your chart for the volume profile point of control. Thanks. This is called the fixed range volume profile. It's there in the menu. Okay, it's the 1, 2, 3, 4, 5th option where you have your long short positions. You just go down and you have your volume range profile, and you can copy my settings as well. Okay, you can just take a screenshot, ka-ching, and if you can't get the screenshot, just rewind the stream. That's my style, and there's my input. Okay, so you can go and copy my settings, up to you if you want to. Right, legends, I quickly need to take a break. It's been an hour and 20 minutes. I'm going to take a 5-minute break. And still a lot that I need to discuss, or that I want to discuss. Maybe that trade is going to play out, or a little bit of a long. But can you guys see, just by looking at the 4-hour time frame before I take my break? Okay, can you guys see why I'm not really interested in a long over here? It's below the value area low. It's below the point of control. Can you guys see why I don't really want to force a trade? It's going to take patience for the high probability setup. Yes, you can scalp. You can even get a little bit of a day trade, okay? Plus you cash out. Like the long that I took on Tuesday. I knew that there was a chance for price to move up. That was a high probability trade based on the 5-wave structure to the downside. But anyways, guys, not feeling the long at the moment, but let's see how it plays out. Okay, because I do think price is most probably still gonna. Tomorrow is a high volatile day. We all know. I think if the big move is gonna happen, it would be nice if it happens tomorrow. That would be really nice. But now can you also see why shorts look so interesting for me? Just looking at this structure without getting into Elliott wave theory, why does the short look so interesting? Because it could be a back test of the point of control. Okay, maybe price for you now you can see how Elliott wave theory fits into this. Maybe price forms that A, B, C, and then falls to the downside. It grabs the liquidity below, it rejects at the point of control, and it falls to the downside, and it stops me out of my long. I'll be happy to be stopped out of that long. Okay, I've already taken a generous amount of profits. But it's this long. Okay, I don't know where that long is going to happen, guys. It's a big zone. I've just explained to you my preference. I would love for price to come down lower because I want to trade against sentiment. I want to see fear. I want to see a lot of fear. There's too many eyes on that level. And price has already bounced on this level. Okay, I'll discuss that when I come back. Let me, put a little bit of a text box in here. Guys, I know when I do these long live streams, I always put in here, okay, back in 5. I am doing something very, very cool. Okay, I'm going to introduce you guys to Wick. I'm going to introduce you guys to Wick. He's not ready yet. Wick is not ready yet, but he will be entertaining you while I'm not here. Okay, back in 5 minutes. Right. What I can also do is I can, if I'm not mistaken, I do have a timer. Okay. Legends, thank you. I'm not saying goodbye. I'm going to be back. Guys, I'm just literally taking a 5-minute break. I might even be back sooner. Okay. I need to pace myself. I also need to use the bathroom and do some other things quickly. I'll see you guys in a moment and I'll leave you with some music.
Don't wait for tomorrow's light. The sky is glowing here tonight. Every second softly calls, even echoes through these walls. There's a rhythm in your chest telling you this moment's blessed. You don't need a perfect sign, you don't need to read the lines. Just breathe it in and let it show. This is where you start to grow. Right here, right now, we breathe it in, not in the past or what has been. Right here, right now, this is a place where every dream begins its race. Right here, right now, stand tall, this is your moment after all. You don't need to understand it all, just keep moving when you fall. Every shadow fades with time, every mountain starts to climb. There's a spark beneath your skin, that's where all new roads begin. Feel the pulse beneath your feet, hear the quiet in the beat. Something greater pulling through. All of it begins with you. Right here, right now, we breathe it
All right, let's get the party on the road. Put the music softly there in the background. Let's continue with the technical analysis. It looks like we have, do we have Andy here in the live stream as well? Welcome, Andy. Welcome. Nico, legend. Yes. Nico, always great to see you here. I hope I can put you to sleep. I'm in bed with sunglasses. Sunglasses watching the live stream. Am I that bright, Nico? Hey, Devil, do you trade anytime? Asian, I don't really pay attention to the sessions, the London Asian sessions. I just trade the opportunity that the price presents. So let's say, for example, I'm planning for a long at a daily level. I don't care during which session that daily level gets hit. I will attempt a long if I do see the reaction from a swing failure perspective, especially if there's Elliott wave alignment as well. So no, I don't really I know that there are traders that specialize in trading specific sessions like the New York Open and the Asia session and so forth. Okay, it's not something that I pay attention to. I trade when my alarm goes off, or at least I look for a trading opportunity when my alarm goes off. Okay, and right, legends. Now I want to quickly discuss worst case scenario, but before I do, let me go through some more comments. If you can show us how to use it even better, my man. If you can tell why you've currently on the chart on the volume profile point of control, thanks. The volume profile, okay, I will discuss that. Dield, I want to thank you for all. Okay, I've gone through that. Dield, if you can assist, would appreciate that. Okay, I've gone through all these top comments already. Guys, if I miss your comment, please, I'm not doing it on purpose. Okay, if I miss your comment, okay, I'm not doing it on purpose. Please don't send me a message to say that you purposefully ignoring my comments. It's not my intention. Okay, right. High volatility news again in 15 minutes. PPI data. Maybe that's going to give us the little dumpy here to the downside. Let's go and check it out. Free tools. Economic calendar. Today, Thursday, PPI, month-on-month 430. High impact news coming out in 15 minutes. Let me set an alarm on my phone, okay, not my chart. Okay, let's do a little bit of a countdown so we can see. Well, okay, let's do it like 12 minutes from now, so we have like 2 minutes to pay attention for potential trade. I will put my alarm here. And maybe price is going to form that little B flat. Okay, maybe price is going to form that B flat. Remember, guys, if you want access to all of these tools, okay, we've got CVD, which is my favorite. I'm always on CVD to see what is happening here. And you can see that there's local berry CVD building up, increasing the probabilities to push price a little bit to the downside still. Okay, and Andy loves to use the footprint, which is a great tool to use in combination with swing failure patterns. I must be honest, I still need to learn how to use it properly. I have an idea and I've watched Andy's tutorial on how he uses it and how he explains it on the live stream, but I still want to cement my feet a little bit deeper into the tool before I start teaching people how to use it. Okay, but Andy is the king when it comes to footprint. We have the fear and greed. Currently, fear and greed is at 29, still in the fear territory. People are still fearful from a sentimental or from a sentiment perspective. There's calculators to do your risk management. There's bubbles, which I also look at, you know, to see where's the strength lying at the moment. I'm sure you're all familiar with the bubbles, okay? But it's basically everything that I use and that I look at and Andy looks at under one roof, okay? And by the way, guys, if you did not know, well, now you're going to know. If you did not know yet, now you're going to know. Ethereum is here as well. You can go check out CVD for Ethereum as well. Okay, and we are going to add more altcoins in here, but we're going to focus on the high cap altcoins, okay, first. Because CVD is a tool that I use from a day trading perspective. Okay, so I am not really interested to day trade anything with low volume behind it. So ETH was a logical next step, okay, because it is the queen of the alts. And Bitcoin, obviously, I do 99% of my trading, if not more, on Bitcoin. As you can see that all these trades were taken on Bitcoin, all of them. Okay. And but I am very interested in an ETH trade. I am very interested in an ETH trade, but it's not there yet. And I will maybe discuss that in this live stream as well. Where am I looking for the ETH trade? And it's actually going to be a very simple answer, okay? But I will get to that. I'll tell you now where I'm looking for the ETH long. I'm looking for a long on ETH, but it's not time yet for me to look for that long. Okay, but Bitcoin will tell me when it's time to look for the long on ETH, because I want to take the ETH trade as well. Okay, but I will share that with you in a moment. I mean, I'm still going to be here for a while, legends. And but if you want these tools, there you go. There's the trading tools. Okay, I want to highlight, if you are new to the stream and you're watching me now for the first time, okay, and you want access to our community, you want access to the tools, if you are signed up with one of my affiliate partners down below, Bluffin, you get 30% discount for new people signing up on your trading fees. For 7 days, you get upgraded to VIP status. 2bit, you get upgraded to VIP status 1, which reduces your trading fees. Okay, your trading fees goes towards paying for these things, so you can make your trading fees work for you. Okay, just by trading like you usually do, your trading fees goes towards those tools, or you can pay the monthly subscription. For me, it's a little bit of a no-brainer. Okay, if you are a great content creator, myself and Andy are looking for someone to join our team. Basically doing what we're doing, providing technical analysis, analyzing, maybe not Bitcoin, okay? It's great if you can do Bitcoin, but maybe something else, the Nasdaq, gold, anything, right? If you think you have what it takes, you can go and apply. Okay, so high impact news in 7 minutes. Well, sorry, I put it on 12 minutes, but about 10 minutes from now. So let's continue with the technical analysis. Hi, Devil and Legends. I'm a little bit late, but I'm here. We would love a juicy ETH long. Yes, Rick Tai, I'm also looking for that long on ETH, and I'll explain that. Mind Pillar tools are awesome. Everything in one place. Devil Andy, any chance we can get an app version coming out soon for iOS? Download pretty, please, lol. I was waiting for this question. I think the goal for now is to get the tool to a place where myself and Andy are 100% happy that it's got everything and everything is optimized to the best that we can do it. Then maybe we will delve into the app territory. Okay, but for now, it's going to stay on the web version until we've perfected it and included more things, because there's more things coming, guys, to the tool. It has liquidity, it has the heat map. Also, I'm not sure if you guys are aware that CVD is the tool that I use from a day trading perspective. It shows you divergences. If you are struggling to read it by yourself, it shows you automatically where the divergences are. You can even measure it manually. You can, for example, say against that pivot and where price is at the moment, is there bearish CVD? Ooh, there's 2 confirmations already on the higher time frame, okay, between those 2 pivots. So logically, it tells me that if price pushes up higher, there's a chance for a rejection back to the downside based on the bearish CVD that's building up here. It shows you what market makers and retail are doing, okay. And I want to trade with market makers. I don't want to trade with retail. Okay, but it also shows you liquidity. Well, where's liquidity? Okay, there's a lot of liquidity to the downside, more liquidity to the downside than to the upside at the moment. So it would make sense for price to claim the lows again based on the 3-wave structure up. Go and claim the lows at between $63,000 and $62,800. Okay, there's a massive pool of liquidity. Now, what makes it interesting is when I look at liquidity to say that, well, based on that B flat that I've explained, is there a chance for price to grab the liquidity and move back to the upside? Yes, there's an Elliott wave scenario that supports a B flat. So let's just say $62,800. Okay, $62,800. Now I want to go back here onto the smaller time frames, zoom into this little structure, and switch on my scenario. Well, where does that liquidity lie? Right here. So maybe if price turns around here and falls, that could be the B. Okay, you have the A, you have the B, grabs all of that liquidity, and you have the C back to the upside. So it is an interesting zone, and that is a trade that I will attempt here on the live stream if price gets to my area of interest. Remember guys, I told you why I didn't want to play that SFP, but it's worked out pretty well so far. So if you did take the SFP trade, which was a beautiful SFP, for me that would be a profitable trade already. Okay, if I had to enter it. Because this is typically how I would play a swing failure pattern. Okay, is maybe you get in, you see the price dips down, it gets acceptance back above, you enter a little bit late, it doesn't have to be precise, but where price is at the moment to where my stop loss is supposed to be, it's already a 4 risk to reward trade. 4 to 1 risk to reward. So for every $100 that I'm risking, I'm now $400 in profits. This is usually where I take some off the table already. I would have taken off the table here already. There. That's where I would have taken off the table. It's already a profitable trade. Covers my fees, covers my stop loss, and I leave a runner. Okay, so if you did, because I know there's some sniper traders, SFP traders in our community. If you did take this trade should be a profitable trade. Okay, you can protect position however you want to manage this trade, but nice little risk to reward trade here to the upside. Anyways, I didn't take it because I can choose what I want to take. Okay, it was I must say it was a nice little reaction there at the lows. But if price comes back down, based on liquidity, this looks like the best zone. Okay, so right, I wanted to talk about the worst case scenario. So let's take the Messier out the chart. Let's go back to the 4-hour time frame, and I want to discuss something over here. Okay, worst case scenario, price takes the low. Okay, because remember what I said, guys, I'm very interested in a long in this zone. Okay, I've gone through that in detail. Why am I interested in a long? The psychology behind it, the liquidity behind it. Very interesting level for me to look for long. I know that price can bounce there. I know it is a bouncing zone. I just don't like it because there's too many eyes on that level. And usually when there's a lot of eyes on a specific level, price likes to scare people out of their trades or liquidate their positions depending on how much leverage they use. Okay, so that is the zone. Okay, let's just give it a bigger zone. That's the zone where I think there's a high probability for a bounce if price moves down. Okay, but now there's the worst case scenario. What if price falls down, it does not bounce here, and it just continues and it takes the lows? Okay, the reason I went back here, okay, the reason I went back here and I showed you guys this. Okay, do you see this structure? Okay, let me switch it on so it makes more sense. There we go. Do you see that structure? That's what I see happening if the worst case scenario, price takes the low. So if I revert this back into the higher time frame, and I'll explain to you why I would prefer a sweep of the lows than a capitulation to the downside. So this could be a 3-wave structure in a A. Price forms a 3-wave structure in a B. And it goes back up for a C. So I'm applying the same method on from the smaller time frames here on the larger time frame. Okay, this is the worst case scenario technically that carries the highest a higher probability. Okay. We have some high impact news coming out in 3 minutes. So let's maybe just go back to the smaller time frames and see what's going to cook over there. But worst case scenario, and I'll explain to everyone, worst case scenario, you have already 5 waves to the downside. So that could be a 1, a 2, a 3, a 4, and a 5. So it can get aggressive, and this entire move can form a 5-wave structure to the downside, which is perfectly fine because the last move in the B wave is usually a C wave to the downside, which has to be a 5-wave structure. So worst case scenario is price sweeps the low and gets acceptance back above. So if price does not bounce there, I will still be very interested in longs because I can just imagine how bearish everyone's going to be if price sweeps the lows. I don't think this scenario carries higher probability than this bounce. I think there's a higher chance for a bounce in this zone than for price to take the lows, and I'll explain why. Okay. But if it does, I will be ready for that trade. From a simplicity perspective, I know there's still 1 more minute left. I want price to sweep the lows, get back above. That is where I enter, so I know where to put my stop loss, and price basically swept the liquidity. Swing failure on the higher time frames. So let's dive here into the smaller time frames and see what is this high impact news going to give us. Okay, so basically looking at this scenario, let's see. Okay, if price falls down, okay, I'll see if it's going to bounce in this zone if it falls down. Or the news is bullish, price pushes up, then I'm looking for shorts. Yeah, guys, it's just the impulse of structures to the upside looks so bad. Okay, even when I look at this structure, it looks so bad. Okay, is the news positive? Maybe let me know in the comments. Is the news good or is the news bad? Uncle Dewald Legends, good afternoon. Uncle Cyril, welcome to the live stream, Mr. Cyril. Dewald, will you play the D line on the 5 minute? No, that is a question. The D line on the 5 minute. That one? Okay, well, that one is 15 minute. Okay. Yeah, 5 minute. You're talking about this one, right? Talking about this one. I'll tell you why. Maybe I'll take it just for fun if it does break out. Okay, but I'll tell you why I don't like it. I don't like this D-line breakout because of this. What is this? 1, 2, 1, 2, 1, 2, 3. Where's 4, 5, 4, 5, 4, 5? If price came down and then broke out after it did that, yes, I'm very interested in the D-line. This looks corrective to the upside, increasing the probabilities to take the low. So I'm not really interested to play the D-line. Guys, I'm really, you can see that I'm very picky about the longs because everything is pointing down at the moment. Okay, and you can see now price got the rejection. Yeah, SFP from the local highs here on the 5 minute time frame. Maybe the news was a little bit bad. I don't know. Let's go check it out. Here we go. Tools, economic calendar. Actual was 0. Consensus was 0.2. Previous was 0.3. Okay. PPI, guys, I actually don't know. I'm gonna lie to you if I tell you that that's bad or good. It looks like it's bad. I don't know, guys. I'm not a fundamental trader. The only thing I do know is interest rates. Okay, that I know. Okay, but these things, I mean, I can go into the chat GPT and try and figure out, well, you know, what needs to happen. And month over price, commodity sold for personal consumption, capital. Okay, but I'm sure a lot of you know exactly what's happening here. But it looks bearish at the moment because the price is dropping. It had an initial pump and now it's dropping here to the downside. I'm not a fundamental trader. Okay, and I just know technically that there's a higher probability for price to take out this low. Whether price moves up first or it falls down now from where it is, there's a higher probability to take out that low because of this move to the upside. And because of this move to the upside, there's a higher probability to take that low. So if price does move up, you can see that shorts are more interesting for me because of the three-wave structures to the upside. Three-wave structures to the upside. Shorts for me looks way more interesting, but price is not at a shorting zone. This is not where I want to short either. I need price to move up for me to consider a short. I want price to potentially form that ABC. Okay, it forms an ABC. Then I'm interested in the short. That's going to be a nice little short. Okay. But yeah, it just feels like forcing a trade for the sake of trading for me. Okay. And by the way, I need to make this white. I don't know why I changed the color to yellow. Make them dashes. Okay. So let's see how this unfolds. I just want to see what you guys are saying about the PPI. Neutral, no moves below forecast. Core PPI. Lower than expected. A neutral or negative PPI means that price for product producers are equal or lower. So that means this impacts inflation in a positive way. That would mean that lowering or keeping. Okay. Thanks, KGS. Thank you so much for explaining. Okay, because it's not my forte. Okay. Yeah, 0 below forecast. Okay, so are we saying the higher it is, the worse it is? Higher is bad and lower is good? Is that what we're saying? Cooking some Damperino, but almost done. What if market makers choose to trap the upside and then take out the liquidity down because they need it to go up? Yeah, there's just not a beautiful structure that supports, but I need to talk about that scenario. It's just not a pretty structure that supports price moving up first. Okay, if price does move up first, yes, it can still, guys, you know, there's still a lot of resistance here to the upside. So I would love for price to move up first, but there's not a high probability scenario where price takes out the high at the moment. There is a scenario, and I'm going to explain it now, where price can take out the high. It's just not a high probability scenario. Okay. So on the 15-minute time frame, which is one of my favorite time frames, 15-minute, 1 hour time frame, if this structure is an impulsive structure, okay, 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5, ABC. Now that is your bullish count. Price has formed an ABC. Okay, that's the high. Not that one. That's the high. Okay, so that's what we need to discuss now. Let me see if I still have that count here. No, not that one. Impulse up. So you're basically looking at something like this. Let me just take the polyline out. So let's discuss the bullish case scenario, because remember, a good technical analyst will always have a bullish and a bearish case scenario, but then based on the local structures, you can have probabilities. Is there a higher chance for the bullish structure, or is there a higher chance for the bearish structure? So this is now the bullish case scenario. What if price takes out the high? Like you've just mentioned in your comments. Okay, firstly, price needs to break through this point of control and gets acceptance, and it needs to get acceptance back above. So the bulls have a lot of work cut out for them. The most amount of volume traded during this entire range since June, almost 3 months ago, is here. That's the highest amount of volume. So the bulls are going to have to push through with a high amount of volume, not just grab liquidity and fall down again. Okay, so that's the first obstacle for the bears, is that, or for the bulls, they tried to get through and they failed. They tried to get through and they failed. They tried to hold, it bounced and it broke down. So you can see that the bulls needs to, first step is the bulls needs to reclaim this level. But there's an issue. There's a little bit of an issue, okay? And the issue is the bulls needs to reclaim that level in a 5-wave move to the upside. And I don't see a 5-wave move to the upside yet. Because the 5-wave structure is to the downside, which means that when price goes up in 3 waves, there's a higher chance to take out the low again. Because I can see 1, 2, 3, 4, 5 to the downside. And this structure is a 3-wave structure to the upside. So even if price forms a larger 3-wave structure, there's still a higher probability for price to take the low. That being said, I have to now consider, you can see guys, it's not easy to try and figure out the bullish case scenarios because the structure is showing me that it wants to go down with a higher probability. But okay, now let's consider it. Okay. So price has formed since this high an A, B, C. Your C wave is allowed to be a 5-wave structure to the downside, which means that this can be the end, and now you want the bulls to push price to the upside. 1, 2, 3, 4, 5. Cool. Or A, B, C. But it's the same opportunity. Okay, it doesn't matter if it's an ABC or 1, 2, 3, 4, 5. It's the same opportunity. But now this is where the issue is for me. If this is the end of C, for momentum to continue to the upside, price needs to form a 5-wave structure, and it formed a 3-wave structure. So that's now a problem. Once the low is created and you want price to reverse, you want a 5-wave move in that direction, and price has formed a 3-wave move in that direction. It also tapped the 0.9 Fibonacci here at the bottom when I take a fib from the low to the high, which is extremely, so even if by some miracle on the smaller 1 minute 30-second time frame I can count a 5-wave structure here to the upside, 1, 2, 3, 4, 5, not easy to count the 5-wave. You have to force a count in there to count the 5-wave structure. Okay, that's a very deep retracement for a wave 2. So let's say that's your 1, that's your 2, and now you want price to go up in a 3, 4, 5. Guys, it's not pretty. Okay, it's difficult for me to give this scenario the highest probability for this to be the low, unless this is the start of a larger corrective structure. That kind of makes sense. That to me would make more sense to give the bulls the opportunity to take the high again without taking the low. This needs to be the start of a larger corrective structure. And what do I mean by that? Because in a B, C, it can give you a W. Let's keep it simple. It gives you a W. I know I'm saying let's keep it simple, and then Devil throws an alphabet letter here, and what the hell is a W? Okay. But you'll see it makes sense now. Price forms an X. Okay, guys, it's either, let me show you here. Under the Elliott wave tools, can you guys see this? Under the Elliott wave tools, you get your 1, 2, 3, 4, 5, which is your impulse. You get your ABC, which is your corrective structures. It's the one that I have here now. You get an ABCDE, which is a triangle, which I'll explain in a moment. You get your WXY, and then I never use that one. Okay, so there's all your structures from an Elliott wave perspective. Okay, so I'm now discussing this one. ABC gives you a WXY, a larger corrective structure. Okay, and then price does this. It forms a triangle in a Y. And then that's your Y. And then price says, whoop, shoots to the upside. Now that for me is the only bullish case scenario that I see. But what's going to be interesting about the scenario, in this scenario, price needs to go sideways. You can see price needs to go sideways. So there's still a lot of time for me to make a decision whether okay, price is going to take this high. Because the longer price chops sideways and it doesn't take the low and it doesn't take these lows, it literally just goes sideways, because you can see the structure needs time. In a W, X, Y in a triangle, it's too short in time, way too short in time. So the longer price goes sideways, the higher the probability for the scenario will be. But at the moment, I can't give it the highest probability based on current price action. I need price to go sideways for longer. Okay, and remember what I showed you over here? You get the A, B, C, D, E, and that is basically your, let me select it. That is basically your A, B, C, D, E after X is in. Now it's the A, B, C, D, E that forms the triangle and then price breaks out. But it needs more time. You can see how long, okay, I can even measure it. You can see how long W is. Can you see how long W is? And usually Y and W is more or less the same length. So I would, after X is in, I would like to see something similar in size than the Y wave. I apologize if this is so technical. Okay, you might be joining this live stream now and you're like, what is this guy doing? Is he trying to teach us our ABCs? Okay, Elliott wave theory is very interesting. Okay, it's the only predictive tool that we have in trading. It's the only predictive tool. And yes, it can be many scenarios, but some scenarios, you know, I like to say I have to wait for the structure to show me what it wants to do. Based on this is an absolute speculation. This is an absolute speculation because I don't have that price action yet. But what I can tell you is based on current price action, because I don't have that price action, is the probabilities are higher to take out this low and this low. Based on the price action that I have at the moment. If price does form the X and the A, B, C, D, E, and you know, when price is here, maybe here somewhere, I will start changing my tune. And I will go into the community and I will start highlighting the scenario where I'm looking for the long, where I'm going to put my stop loss, because then I'm going to say, okay, well, it looks like the bulls wants to fight back. Okay, but basically price needs to actually stay at this point of control and just chop this point of control. It's not losing it, it is not breaking it, it's just creating more volume at the point of control. But I can't speculate on this because I don't have that price action yet. I'm just showing you what could unfold. So basically for the bulls, you need more price action. You need a longer consolidation area. Okay. There's another scenario, and I want to create confusion, and this is why I'm trying to limit the scenarios, is that this could be a A instead of a W. But because A is a three-wave structure, it means B has to tap the high, flat, and price goes down for a C. So price forms an A, B, C. Does not take the low, and then it moves back up. I don't particularly, it's not an invalidation. This can happen, guys. Price can move up here, create a B flat, fall down in a C, take the low of A, and bounce. It can happen. It's just not common to see such a deep A wave. It's a very deep A wave. Then go back up for a B flat, then come back down for a C. And the reason I say A is, for me, it's a little bit of a problem because of how deep A went, is that it doesn't give C enough breathing room before taking the lows. Most often what I see in flat corrective structures is it does it on top. It does it higher up in the structure. It does it by the 0.382. So if I clean up the chart a little bit over here and I put in a fib from the low to the high of the structure, most commonly in an ABC flat, okay, what I see is price does this, it creates the A in this zone most commonly. Then it creates the flat, and then it gives the C wave enough room to fall, grab liquidity, scare everyone, and then get the bounce back to the upside. Okay, but this is a very deep A wave. So you guys can see it's not an invalidation. I just can't give it the highest probability because it went really, really deep for this to be a B, and then a C, because there's not a lot of breathing room for the C, and C waves gets really aggressive unless it forms a running flat. And now you're going to say, what the hell is Devil talking about? A running flat? You have a flat, you have a regular flat. Okay, all I know is a flat tire. So guys, yes, it can still get messy, okay? I know it can still get messy. A running flat is basically price forms a B, okay? But it has to take the high. It has to take the high in this scenario. And then C does not take the lows. If the B flat that goes up here taps the 0.9, then C has to take the lows. But if it claims the highs, it doesn't have to. Okay, but I don't want to create too much confusion, guys. And you can see now, because some people do send me messages sometimes saying Elliott wave theory is easy. Okay, it's 5 waves up, 3 waves down. But now you can see how complex it can get. I don't know what we're going to get next. But that's sometimes where you need to incorporate other things that you see in the chart to give scenarios probabilities. Because I can have 20 scenarios over here, and then you get analysis paralysis and you don't know how to trade it. Or I can use probabilities and confluences and say, okay, for me it's as follows. Let's take all the Elliott wave scenarios out the way. I have 20 scenarios and I don't know which one is going to play out. Okay. Well, I can tell you now the bulls have work to do over here. Price failed to break the value area high, increasing the probabilities that once the value area high and the point of control has been lost, it increases probabilities for price to come to the value area low. Now there you go. You have a probability. Based on this range, you now have a higher chance for price to come down. So therefore, I will then choose Elliott wave scenarios that supports momentum to the downside based on this analysis that I've done. Did you guys see where my strain of thought is going to? Because there's a lot that can happen here. Okay, how am I going to trade it? And then I can even go in a step further to say, okay, well, where do I have resistance? I have order blocks to the upside. If I zoom here into the 15-minute time frame based on this local structure, okay, point of control, beautiful rejection. Whoever got into that short from yesterday, high impact news, well, I know the high impact news was up here, but whoever got into this short this morning, well done. Rejection from the point of control. If price continues to move up here, I can look for a short swing failure from the highs. If price breaks through, okay, and it comes to the next area, shorting zone. Shorting zone, purely based on resistance and support. If price falls down, well, where is the support to the downside? I've explained that on the higher time frame, the best support to the downside, okay, because there's not a lot of levels, guys. Okay, if I switch on all my levels that I have currently on the chart, if I switch on daily levels, weekly levels, point of controls, hell, where's my monthly folder? I even have a monthly folder here somewhere. And for some reason, I might have moved it. Okay, maybe it went out for a beer. Here we go. Okay. Well, there's a monthly naked point of control at the point of control of the entire range. Okay, but you can see I've switched on all my levels. Okay, you can see I have a lot of them. But in this zone is nothing. So from a level perspective, there's not a lot of support, which means that if price loses this area, there's a high chance it's going to come down. And then you can be a little bit creative and say that, well, okay, maybe what we still have is Fibonacci levels. But now you're trading Fibonacci levels. That's all you're trading is Fibonacci levels with no confluence. Okay. And then you can get a little bit creative, and now you are manually identifying areas of support and resistance. Okay, inside of this entire range, there's a point of control at the 786. So you could have a trading plan that then says, based on this consolidation area, the most amount of volume was traded over there. There's confluence with that level at the 0.786. So usually how I would treat these zones, that if price does get there and it swings the level, okay, like it did there, you could attempt a long with your stop below the low. So, and this is me trying to find support because there's none from a levels perspective. Okay. Right. The best area of support from a volume perspective and from a levels perspective, you can see why I also like the long from down here. Because there's a weekly naked point of control. There's a weekly level there. It is the 0.786 from the low to the high of the structure. 0.786 weekly level, naked point of control, and there's a high volume node. There's also a high volume node over there. It's also a sweep of the liquidity below the lows. So you guys can see technically, based on confluence, this looks like the best bouncing zone. Okay, so what if price is going to go up first? Like, you know, someone asked in the comment sections. I just don't think it carries the highest probability. And if price does continue up, there's still a higher probability to claim the lows. So the long for me still looks more interesting. Remember, guys, I can be wrong, okay? No technical analyst in the world will be right 100% of the time. I'm just discussing with you probabilities based on what I see inside of the structure. If anything changes, I update the community and say, guys, remember that plan that I had this morning where I wanted to take the long? Throw that in the bin. I'm now looking for this short. Because based on new price action, I can change my mind. New price action gives me new information. New price action invalidates certain scenarios and gives other scenarios higher probability. So I can't be on YouTube all the time. So sometimes what happens is I will discuss something here on YouTube and say, guys, that looks great for a long, or that looks great for a short. And then 2 hours later in the community, I post an update to say, scrap the long or scrap the short. I'm not looking for that trade anymore. And this is now the trade that I'm looking for, because as price develops, I can change my mind based on new information. And that's why I think it's so cool to be inside of the community, is because they get the updates, because I can't be on YouTube all the time. Okay. If you want to be part of the community, you can send me the word access to my Telegram, and I'll send you the instructions on how you can join. You also get, if you sign up with one of my affiliate partners down below, your trading fees goes towards paying for the subscriptions. So you can get your fees to do the work for you, okay? Because at the moment, if you are trading on a normal exchange that you've Googled yourself, you're just paying trading fees. And why not get those fees to pay for things that you would love to do also, okay? Or to have. Right, this is this is not a statement of you have to trade more. I'm just saying, if you're trading like you usually do already, why not get your trading fees to do the work for you to unlock the community, surround yourself with like-minded people, and also get access to the tools that I use from a day trading perspective. I want to see what CVD is doing. A little bit of bearish CVD building up, but there's some local bullish CVD pushing price now to the upside. Okay, that was actually a very nice SFP from the 0.9. Okay, but if price continues to move up here, there's a very interesting short. So someone asked me, Devil, will you play the breakout from the 5-minute time frame? Guys, I can do it for fun, just based on the strategy. I just want to check that it didn't run away from me yet. Okay, but there it is. Okay, that is the D-line that someone explained to me. But now I need to explain to you the rules of this strategy. Well, my rules, okay, my rules for this strategy is as follows. Yes, it can follow through and it can break out. Okay, so it's up to you as a technical trader. But if I enter here, the rules for the strategy says I have to target the high of the structure and my stop loss needs to go below the low of the structure. So my rule says if the risk to reward is not a 2 risk to reward, I need to, if I risk $100, okay, for this trade, $100, I have to make $200 at least to the upside for me to take the trade. And you can see where price is piercing here, I'm not allowed to take the trade. Whether it's going to play out or not, I don't care. My rule says I'm not allowed to take the trade. So I have to respect my rules. I can enter it from an entertainment perspective just to show everyone, okay, yeah, we've got at least a trade running here in the background while we talk about technical analysis and everything else. But I just want to highlight to you that according to my trading rules, I'm not allowed to take it. And I respect my trading rules because my trading rules keeps me profitable. I don't care if price moons here to the upside. Because most often than not, okay, my trading rules protects me because price does the opposite. And this is why, okay, my portfolio is still in the green and my losses are small and my wins are big because I respect my trading rules. So according to my trading rules, I'm not allowed to take this long. Can I do it for fun? Yes, but price needs to close above that level. Okay. If you go to the 1 minute time frame, well, there was a better long entry on the 1 minute time frame, guys, but now you're talking about scalping, okay? And this is typically the live streams that I want to do privately in the community, is where I would have played that breakout. Because what makes that breakout so sexy is the following. Can you guys see? Stop goes below the low, targeting the high of the structure. Now the risk to reward makes sense. So for me to take the trade here, you can see it's a little bit of a missed opportunity because I could have gotten a better entry to make the trade worth it. Yes, guys, it can obviously go higher. But the rules of the strategy says that from the height of the structure to where I play the breakout, the risk reward needs to make sense. So I need to respect my trading rules. Okay. Can price get follow through? Of course. Can get here to the point of control. Do a little bit of wiki action here to the upside. Maybe form that C wave. Maybe the B wave is done. I don't know. Okay. This could be your you're stuffing around on the 1 minute time frame. Okay. This could be your A. Maybe B is done over here, because I see on my exchange that low got taken. I'll check that out again. This is your B. Oh God, that does not look like a C to the upside. Okay. A, B, C. Yeah, this could be an A. I'm just trying to find a different count. This could be an W. This could be an X. And now price has formed an A, B, C, and a Y. But that means that has to be the high. And price forms a 1, 2, 3, 4, 5. That's one scenario. That high is protected. And price is now correcting the little impulse here to the downside. That's one scenario. Guys, corrective structures can morph into so many things, okay? And I can go down a route over here and show you what could happen here from a corrective perspective. But for me, that is an interesting short. So if price can continue here invalidating this 1, 2, 3, 4, 5, and it continues and it takes this high, I'm going to be very interested in that short. Because then I know that you have your 1, 2, 3, 4, 5 to the downside. You have a 3 wave up, which increase the probabilities of taking the low. So regardless of what happens here, that's an interesting short for me. Because I know the probabilities are there's a high probability for price to take that low. So the higher, because I missed that short last night with a high impact news, I told everyone I'm not trading it. I'm already positioned in a short. Okay, I also showed everyone yesterday in my live stream how I added to this position because my short was higher up. Okay, so I am already positioned in a short. Position protected, already took profits. It's a profitable trade. I'm also positioned in a long. So it doesn't matter which way price goes, there's money to be made. Okay. If I get stopped out of the short, I'll look for a new short. If I get stopped out of the long, I will look for a new long and I will update the community if I do so. Right, I'm just trying to think, well, what bullish structure is not looking pretty? Okay, I just want to clean up the kitchen a little bit over here. Okay, so the only bullish structure where price does not take this low is a leading diagonal. But damn, we still need a lot of price action for a leading diagonal. And it's basically something like this. Okay, and you only have wave 1. So you have a 3-wave structure in a wave 1. You have a 3-wave structure in a wave 2. And now price needs to form a 3, a 4, and a 5. Then the correction becomes the opportunity to long. But you can see I need more price. I can't give the scenario any probability. This is pure speculation. There's way too much that needs to happen here before I can say, okay, because a leading diagonal by itself carries low probability. Now to speculate on a leading diagonal to form over here, not great. Okay. Something else that would actually make more sense for me, guys. And you're going to say, oh shit, the alt is so bearish. Guys, the structure is showing me that it wants to be bearish, okay? But something else that I'm considering here is, if this is your 1, 2, 3, 4, 5, okay? That's your 5-wave structure to the downside. This could be, it's also going to take a lot of time. This could be an A, B, C, D, E. Can still form a triangle here. Okay, can still do that. But guess where price goes after this? But you can see I still need more price action. I still need more price action to give the scenario a probability. Okay, but guess where I'm going with this? On the higher time frame, on the 1 hour time frame, what could that be? Okay, so let me clean up the kitchen. Let's switch off the levels. Weekly point of control. So remember this scenario. That's something that could play out. Okay, 3-wave structure in a W, A, B, C, and a X, and price forms an A, which is already done in a 5-wave structure, and it forms an A, B, C, D, E, and a B, and then it falls down in a C wave. B waves are allowed to be triangles. It's just going to take it's going to take a lot more time for this triangle to form. Okay. But interesting scenario to consider. Okay, but can you guys see there's a lot that can happen here? Okay, if price takes this high, then this scenario. So how do I invalidate the scenario? If price takes this high, the scenario gets invalidated. Then I have to look for something else. But I'm still interested in a short from there. I'm still interested in that short. So guys, often it doesn't matter for me how I count the structure from an Elliott wave perspective. When price gets to an area of interest where there's nice resistance, a daily level, a weekly level, I can attempt a short or a long. That's just how I like to trade. And often I'll have an Elliott wave scenario that supports a rejection or continuation in a specific zone. It was like the long, I mean, Andy spoke about this so long in his live stream as well. This was such a high probability trade. Obviously, nothing's ever guaranteed in the market, but this long was such a high probability long. For a bare minimum, a 3-wave structure to the upside to come and eat the 4th wave. I see on some exchanges there was actually a higher high. Yeah, on Binance it made a lower high. But I mean, it claimed a 0 point, but it was a very high probability trade back to the upside to look for longs in this zone. It was a weekly level, daily order block. Volume decreasing on the high on the 1 hour, 4 hour time frame. It was a really great trade. Okay, I obviously got stopped out because I protected my position a little bit too high. I had my stop loss a little bit too high and I got stopped out of the position with 50% profits. But I did take the trade. Okay, I also, while Andy was in the live stream, I also highlighted to the community, Legends, very interesting zone for long. Let me see if I still have that. Just want to share it over here. Basically, everything that I'm discussing here, I've already discussed with the community because, guys, they get the alpha first. And I just want to go back to, yes, okay. This is basically where I highlighted it. But it was very interesting what happened here, okay. As price, can you guys see here? As price was pushing up, I highlighted the 1.618 and the 2 extension for a short. One of those two, where I want to see the rejection happening. Guess where price got rejected? Let's go back to the chart. Okay. Let me clean up the kitchen. Switch off this and I just want to drag that to the top so I have it there. If I go here to the 5-minute time frame, do you know where that rejection took place? Let me just put on the levels. Extend it to the right. And just make sure that I snap it on with the magnet. There we go. There we go. No, that one is wrong. Do you see where price got rejected? Man, whoever caught that short. Man, oh man. Look at that. To perfection, to the dollar, price rejected at the 1.618. Which was, I'm not sure, guys, if you're paying attention in class, okay, that's the level that I highlighted. That's the one that got the rejection to the dollar. So whoever got into that short, I actually need to go through the money shots because I know the community members love to share their winning trades. Also, they're losing trades inside of the money shots section. I want to see who caught that one. Okay, because yeah, that was a beautiful short. Right, price is now in the common rejection zone for wave 4, also highlighting some additional levels for potential rejection. If price pushes up further, okay, I'm looking at the 1 hour order block. Price didn't get there, so that's still a shorting zone that I'm currently now watching at the moment. Andy did a nice little live stream, but as Andy was live, okay, I also highlighted prices now at the weekly and the daily level. I entered a long. That's the long where I got stopped out at break even. It's that one. That's the long I took at the daily level. Got stopped out with $68 profit, because you guys know how I trade. Okay, protect position, take profits, blah 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 blah. Okay, and then price continued to move down, and then I highlighted lower volume, increasing the probabilities for a bounce in this zone. That's what I like to see. It's also retesting the trend. Okay, I do like volume decreasing. And then on the smaller time frames, what was this? The 10-minute time frame I highlighted as price was getting the bounce from the daily and the weekly. I highlighted, I think there's a chance for price to take the lows again, then get the bounce. 1, 2, 3, 4, 5. 5 waves inside of the third wave. 1, 2, 3, 4, 5. So I said definitely a possible. If that is not the low, I think it can take the lows again and bounce. So still interested in a long. Okay. SL covered. I'm just sharing with people. SL covered, free trade. I've basically protected the position. Price consolidated. And what happened is it took the low. Okay. And then I just highlighted some of the scenarios that I'm talking about now as well, explaining the high impact news. Okay, you guys can see. Basically, I share everything inside of the community. If you want to be part of the community, you can send me the word access to my Telegram, and I'll send you the instructions on how you can join. Right, did a live stream. I'm not really interested in shorts until price is after the 0.382. I've also spoken about that in the live stream. Okay, as price was pushing up here yesterday, I said I'm not interested in a short until price gets after the 0.382, and it literally rejected exactly after the 0.382. Okay, right guys, so a lot that gets shared. That was basically, and this is last night. Yesterday during the high impact news, as price was approaching the 0.5 Fibonacci with this trade that I'm in, I told everyone I'm taking profits. Looks bullish, okay, because that's where the greed monster kicks in. Oh, it's gonna fly, it's gonna fly. You know what I didn't like about that level? Volume is decreasing. Can you see it goes from high volume to low volume? So it's pushing up on decreasing volume. I was just like, oof, I think I need to start taking some profits. And what happened after that? Well, we all know what happened after that. Price fell down. Okay. Took 50% profits. PS, I'm not trading the news, already positioned. Because I'm already positioned, guys. I was also in the long from on my 2-bit account. I'm already positioned in the long. I'm in a short. I'm well positioned. I don't have to trade the news, because news can do damage to your account if you're not trading responsibly. It wicks you out. Or even if you are trading responsibly, it can be very frustrating to trade news. Okay, so I prefer to stay out of the markets during high impact events. And yesterday, last night, I then just highlighted it can be an A, B, C. Okay. It did bounce at the 0.9. Again, today it bounced at the 0.9. Okay, missed the SFP, or the most bearish case scenario is prices forming a corrective structure here to the upside and it falls down. So, and that is basically what could happen here. So if I just clean up the kitchen, man, guys, let me know in the comments who took this short. I want to know, did anyone in the community take this short? Because it doesn't get better than that, right? What a beautiful tap. They're not easy though. They're not easy to trade when it just taps the level like that. I know most often what I'm waiting for is it needs to pierce the level, then pull back. They are a little bit easier to trade. Okay, when it just taps the level like that, they're generally not easy. But let me know in the comments who took that short. Because, man, that was a beautiful short. Okay, so the danger, okay? This is why I'm not particularly interested in longs, guys. Okay, risk to reward doesn't make sense. I've gone through that. But now also, in the scenario that I explained yesterday, you have a 1, 2, 3, 4, 5 to the downside. This could be your corrective structure in a ABC. So correction done. Okay, this becomes wave 1. This becomes wave 2. Now, to get an impulse to the downside, this could now be your 1, 2, 3, 4, 5. I can see a 5 wave there as well. Long 4th wave, doesn't matter, it's valid. And this could be a corrective structure. And now it's building another 5 wave, corrective structure. So it's building that 1, 2, 1, 2, 3, 4, 5, 4, 5 to the downside. So it's structurally, it's not looking great for the bulls at the moment. I hate to say it, guys, but it's what the technicals are showing me. But I will be ready. If price continues up, breaks the point of control, okay, the best area for me to look for a short is here. That is where I want to short. I would love to short that zone, because that could be the market makers giving me another opportunity to get into the short, because I can see some bearish CVD building up here on the 15-minute time frame. As price is pushing up, there's already 3 confirmations against this pivot, 3 confirmations. And let's go to this pivot. I just want to see if there's a confirmation there against that pivot. And where price is at the moment, 0. Let's try another point. It would help if I click. Okay, let's take that one. Come on, you can do it. There you go. And that pivot, 0. Okay, there's no bearish CVD yet, guys. But there is bearish CVD against that pivot. Definitely against this pivot. So price could reject before it hits that level. So the short that I want, I might not get it. Price might fall down before it gets there. There's already 3 out of 5 confirmations. Remember, the more confirmations you have, I mean, the better. Okay, so what this is showing me, for those of you that don't know how CVD works, what this is basically showing me is that retail is longing. The market makers want price to move down, but they are allowing retail to push the price up for now, until they can't anymore, because it needs a lot of retail power to push the price against market maker momentum. So market makers are allowing retail to push the price up here. They're absorbing the longs, and at some point it's just going to fall down. And this is basically what the CVD is showing me. Okay, that the market makers basically wants price to push down. They're getting ready for it, and retail is longing like crazy bananas. So I'd rather want to trade with the market makers. Remember, no indicator is 100% accurate. CVD at the moment, let's check it out. I want to see how accurate is CVD at the moment. Let's go to the 5-minute time frame. Just refresh this. Where's the... Oh, I need to switch on the divergences. At the moment, based on the current price action here, CVD is 65% accurate. If I bring a little bit more price action in here, it could change. 69% accurate. Okay, on the 5-minute time frame, by the way. It actually keeps a little bit of a score here based on all the CVDs that has been invalidated or played out. It keeps a score here, so it shows me how accurate the indicator is based on new price action that's developing. So you can see, if I look at this entire structure, I can even bring it into the 15-minute time frame and say, well, I want to look at this entire structure. How accurate was the CVD during this entire structure? 53%. Okay, but then I just want to make sure that I have my settings correct over here. Yeah, I like 2 divergences. Max distance. God, if you didn't know, you can go and play around with these settings. Okay, I'm just going to put it here in the middle somewhere. Okay. It is interesting. What is interesting for me to note is that CVD on the 15-minute time frame is less accurate. Can you guys see it? CVD on the 15-minute time frame is less accurate than CVD on the 5-minute time frame. which shows you that lower time frame bullish and bearish CVD always takes priority and they tend to play out more often. And this is why I always tell people that I love to read CVD on the smaller time frames. It's more accurate. Okay, and it shows you here on the tool. It was 57 or 50 something percent on the 15-minute time frame, but it's 75% accurate on the 5-minute time frame. So these local little moves shows you played out. Bullish CVD played out. Now it's building up a local bullish CVD against as prices falling down, so that high could be claimed again. And all the bullish CVD here played out. So very interesting. By the way, if you do want access to this tool, it's over here. Okay, it's not just CVD. It's got everything, guys. Well, everything that I need from a day trading perspective, including Andy. CVD, footprint chart, fear and greed, economic calendar, breaking news. Okay, if you do like to keep tabs on news, it also feeds breaking news into a little hub. So you don't have to go and scratch around everywhere for the breaking news. It will feed into this little hub. Okay, analytics, drawdown from all-time high. I know Andy and Matt likes to look at this. Okay, what is the drawdown since all-time high based on the previous bear cycles? Historical levels, liquidation map, liquidation heat map. Okay, I know Matt and Andy also love this liquidation heat map. I like the other one more. I like this one a little bit more. So there's liquidity at 64,300. 64,300. Just above this high. There's a lot of people shorting over here at the moment. So it's also the point of control. Anyways, guys, I feel like I've been talking a lot. Okay, I need to go through some comments, see what you guys are saying. Remember to smash up that like button if you do enjoy the content. If you're new to the channel, subscribe for future notifications. I'm just thinking about this trend line that now got rejected. Guys, make no mistake, I will take a trade when it makes sense for me to take a trade. Okay, but I'm not going to trade just for the sake of trading. Now look at that. Yes, there's bullish CVD, so it could break out again. Okay, it could break out again because now there's bullish CVD forming against those two pivots. But I must say, price is not in a zone where I want to necessarily take a high probability trade. I can take a trade for fun, a fun trade. We all know what happens with the fun trades. They get stopped out. Most of these losses were fun trades. Okay, I remember that one was a fun trade. One of these other ones were also a fun trade. Because it's not high probability trades. I'm just having fun and I'm usually just opening up a trade for entertainment purposes. But when price gets to an area where I want to take a serious trade, okay, that's where I make the big money. When I want to take a serious trade, okay, big money. If I'm not on YouTube, it will be inside of the community. I will highlight that inside of the community. If you want to be part of the community, you can send me the word access and to my Telegram, and I'll send you the instructions on how you can join. So let me go through some comments. It can be a WXY from 65,500 and end it with Y in a triangle. 65,500. $65,500. So basically this high is a W. Are you saying that this is a W? I don't know, guys. If you are in the community, you can send me a screenshot in the community. I do have the community open here, and you can just tell me in the comment section, hey Devil, just go check out the screenshot. Guys, I'm a visual person. When people try and explain to me in words what they are seeing, it's sometimes difficult for me to understand exactly what time frame, where are you drawing your ABC for the W, where's your X wave, where's your Y wave. It's not easy for me to figure that out from text. So when you want to ask me a question and you can attach a picture to it, like a screenshot of your chart, A for away. I love that. Okay, because I'm a picture person. I study, I visualize everything. You know, even guys, books. I struggle to read books because I'm a visual person. I'm an audio person. I need to see the content, hear the content. Anyways, that's just who I am. So if you are in the community, you want me to look at something that you are pondering about, you can just let me know and I'll go check it out. I do have the community open. Okay. I know Joan is also sharing some Elliott Wave scenarios over here, and you can just share it with me here in the chat section. Okay, I know you guys are chatting amongst yourselves here, so I don't want to show that. That is people chatting with Andy here at the moment. Okay. Dun dun dun. Right, legends, what I also want to do some interesting chats here. Sorry guys, I'm getting distracted here by the chats in the community. I just want to see, I love to read people's comments. What are they up to? What are they saying? Whether they plan too long, whether they plan too short. I love to see the comments, and sometimes I jump into the conversations as well, because I myself and Andy feel it's important to be present inside of the community, because myself and Andy both belong to communities where you have an influencer on YouTube promoting a community and you never see them in the community. They're not active. They maybe post a video or a screenshot and they're gone. So I really try my best, okay, to be active in the community, to engage with people, to answer their questions when I have time, okay, to make jokes, to, you know, leave some psychology and things behind. I see Andy's also having some conversations. People are asking him questions. And I think it's so important for the influencer like myself and Andy to be active in the community. Okay. So yeah, I mean, if you want to be part of the community, you can just send me the word access to my Telegram and I'll send you the instructions on how you can join. Okay, if you are trading with one of my affiliate partners down below, your trading fees, and you hold $500 in your account, your trading fees can go towards paying for the subscriptions for the tools and the community. So you can make your fees work for you. You know, you trade like normal, like you usually do. Instead of just giving the exchange all of your fees, that a portion of that fees goes towards unlocking the community and getting access to the tool, so you can actually get something for the fees that you are paying. Okay, everyone complains about trading fees. Oh, the trading fees are so high. Well, guess what? A portion of that trading fees can come towards giving you something at least. You know, I think that's the beauty about the partnerships that we have with these exchanges. Let me go through some more comments. Which exchange has the lowest fee now? I would say long term, in the next 30 days, 2bit has the lowest fees. If you sign up to Bluffin, then you get 30% discount on your trading fees, but it's for a limited time only. But I mean, I don't know how much, sorry guys, I don't know how much cash you're trading with, because if you have all certain amounts in a specific exchange, you can qualify for VIP statuses, which then reduces your trading fees. Okay, but remember guys, my style of trading, fees does not matter for my style of trading. I know a lot of people are obsessed with fees because why? They are scalping. If you are scalping the 1 minute time frame and you're playing small little moves to the up and to the downside, fees matter. But I have to tell you, okay, that scalping is difficult. Scalping is for the brave. Scalping is for the cream of the crop. And I'm not saying this because I'm saying this. I'm saying this because of data. Data shows that scalpers, people that scalp, struggle to stay consistently profitable. Sorry guys, I dipped my hand here in my smoothie. Out of all the traders in the world, scalpers struggle the most to stay consistently profitable. Day traders, second. They don't struggle as much as scalpers. I'm a day trader. I can scalp. I don't scalp anymore. Well, I don't have to scalp anymore, but I can scalp. And I can go into the details as to why I don't enjoy it anymore, but I have discussed that. Swing traders, on the other hand, are the most successful traders. But each trading style requires a different set of discipline and rules that you need to follow. I typically like to get into a trade in a day, and by tonight the trade is done. Most of my day trades turn into swing trades, like over here. But you can see with my style of trading, I'm playing bigger moves. Fees do not matter to my style of trading. Doesn't matter to me because I'm playing bigger moves. If you're scalping the 1 minute time frame, yes, fees matter because you need price to move enough to cover your fees in order for you to make profits. But that's why fees for me, and guys, I can just share with you how I trade. Fees for me does not matter because I play bigger moves. My fees are usually covered very quickly, okay, by the moves that I'm playing and also the bigger trades, the bigger movements that I'm playing. I'm not trading the 1 minute time frame. I want bigger moves. I want $1,000 moves. I want $5,000 moves. So if you have a long entry, it doesn't matter if you go 100x with your entire portfolio at a specific level, the bigger moves that I'm playing covers those fees. Okay, it's stupid. First of all, please don't do that. It's stupid to do that. 100x with your entire portfolio, you will blow up your account in no time. Okay. But I know some people get a little bit obsessed with trading fees. Okay, but you need to answer a simple question. What type of trader are you? If you're a scalper and you are struggling to stay profitable, you really need to have a serious conversation with yourself. Okay, scalping is the most difficult strategy to do to stay consistently profitable. It requires a lot of screen time. Okay, you should not be working. You should be staring at your chart the whole day. You have to have a clear set of rules. You have to have risk management controls. Things happen quickly from a scalping perspective, and often what people do is they first try and scalp, then they try to day trade, then they try to swing trade. It's the wrong way around. You should first learn how to swing trade or day trade, then you learn scalping, because the rules and the strategies that you learn around day trading and swing trading is what you have to do very quickly inside of scalping. I did a trade, 2 trades. I did 2 trades on Friday. Do you guys remember in the community? I did a live trade in the private live stream, and someone made the comment to say that, "Fuck, Dewald, you do this so quickly. You have all your Elliott wave scenarios on the 1 minute, 5 minute time frame. You're looking at this, you're looking at that. You're already in the long. You've already taken profits from in it, and it happens like that." Okay, I did scalping on Friday inside of the community, a private live stream, where I basically took this long. Guys, please correct me if I'm wrong. It was this one, right? It was that long that I took. And you guys remember? And this was on Friday, 7th of August. Yes, that's where I took the long. And someone made the comment to say that, "Fuck, Dewald, you're so quick. I can't keep up." Because I have mastered this strategy on the higher time frames. And because I've mastered it, I know exactly what the rules are, what my risk management needs to be. Everything related to that strategy is so imprinted in my DNA that I can execute it extremely fast on the smaller time frames. Okay. That's, guys, remember, you do you at the end of the day. I'm just sharing with you my experience. Okay. It just, I just wanted to circle back to, I think people are obsessed about fees for nothing. Everyone's looking for the cheapest exchange. Which exchange has the least amount of fees? Guys, my style of trading, it really, even if Bluffin doubles or triples my fees, it really doesn't matter because I'm playing bigger moves. those fees gets paid off very quickly, okay, because I'm targeting bigger moves. But if you're targeting small moves like this, then yes, fees matter. But then I just have to stress to you, this type of trading takes experience. You have to master the higher time frames first before you get here. You can practice on the smaller time frames because price action develops quicker, so you can practice and get more practice in. Okay, but if you're going serious with serious capital and you are still struggling to stay consistently profitable, trying to scalp the smaller time frames and finding the exchange that has the lowest trading fees, because that tells me when someone is looking for an exchange with the lowest trading fees, it tells me that they're trying to scalp. Okay, I can just share with you my experience, guys. I'm not saying there's a wrong or right. I do know that there are successful scalpers in our community, but they are not the majority. Okay, the majority of successful traders in our community are day traders and swing traders. Scalping, but I have seen that some of the day traders will sometimes do a little bit of scalping because it just looked beautiful at a specific level, and then they will go into scalping mode. But it's not the default mode. It happens by exception. For me as well, guys, this was by exception. I saw the trade, strategy made sense, risk to reward made sense, the structure made sense. I went live and I took the trade. Highs got claimed, left a runner, got stopped out. Yeah, this is where I got stopped out. There, that I got stopped out of this long with a big chunk of profits. I went a little bit heavy. Okay, there's the trade. There's the trade. I went heavy with that trade. It was a high probability trade, scalping. And it was the D-line strategy. Anyways, I hope I've made the point, guys. But, you know, by all means, if you want an exchange with cheap fees, that bully CVD is playing out, by the way. Do you guys see? I pointed out the bully CVD. Bully CVD is playing out. Okay, there was bully CVD forming as price was falling down here. There was bully CVD forming against the pivot. Target is the high. Okay. For some reason, it doesn't want to put it in because I changed the settings. So let me just show you. There was bully CVD. Target is the high. It's now claimed, so the bully CVD played out. Anyways, that was a little bit of another rant from my side. Okay, Devil, how do you reconcile the levels, prices that you draw on Binance to the levels we trade, say, on Bluffin? I don't. I trade the chart in front of me. Albert, it's a really good question because it's a question that gets asked a lot by a lot of traders. So I do my analysis on the Binance perpetual chart. And let's say, okay, to give you an example, let's say I have a level here, a daily level. Let's say this is a daily level and I want to play an SFP from the daily level. So I have my exchange open on one screen. Okay, I have my position size set already, whatever I want to do over there. So I'm ready just to press sell because I want to play a short. Okay, as soon as price gets there and it rejects, I enter the short on Bluffin. I don't care where the price is on Bluffin. I'm trading this chart in front of me. I hope that makes sense. So I don't care about the Bluffin chart or the Bluffin BTC pair or the Mexi BTC pair or the Weeks BTC pair. I trade this chart in front of me. And I've never had an issue trading this chart on another exchange. That's how I trade. I don't go, and because I see some people will go and look for the, if they trade on Bluffin, they will go look for the Bluffin pair and they will do their analysis on the Bluffin BTC pair. I don't do that because it has too little volume and the levels don't make sense. Volume doesn't make sense. Daily levels, weekly levels, point of controls, they all out of whack. I like to do analysis on a chart that has a lot of volume, trading volume behind it, and I trade this chart on a different exchange that could be Bluffin, for example. So I hope I've answered your question. I don't pay attention to the levels on Bluffin when I'm trading this chart. I just execute. I don't care where price is on that chart. I just execute based on the reaction that I see here. And yeah, I've never had issues with that, guys. I've personally never had issues with that. Yeah, sometimes you get scam weeks and things like that, but that's why the exchanges have user protection funds. It has happened to me once where I got wicked out of a position. I can't remember which exchange it was, but they refunded me the money because the wick didn't exist on my chart that I analyzed. They did the research, they came back to me and they refunded me my money. And a good exchange will do that. Okay, if it's not your fault and there's something that's happening on their side that's not happening anywhere else, they'll usually refund you. Yeah, you have to go through the schlep of logging a call and going through the process. Okay, but usually they do refund you. Right, well, this long is playing out very nicely. But guys, I mean, I'm very happy to miss a trade because it doesn't fulfill my trading requirements. Just want to see something here. By the way, that level that I put in there is actually a very interesting shorting opportunity. There's also a 15-minute order block. Do you guys see the 15-minute order block? I see two of them. There's two 15-minute order blocks. Okay, there's a 15-minute order block. But it already got tapped. Can you see where price rejected at that 15-minute order block? You have a 15-minute order block. Where did price reject? At the order block. But there's one a little bit up. There's one a little bit higher. I can see the one a little bit higher. So if price continues to move up, I will consider a short over there. There's another 15-minute order block. Let's just make this longer. So basically what I'm looking for is a rejection at the 0.7, 0.786 if it wants to get a little bit of wiki action there to the upside. Okay. Right, legends. I'm going to take a short little break again. It's been 3 hours. I'm going to take a short break and then I'll be back. I'm going to put my little text on. I might have to retype it because I know it's somewhere. Back in 5 minutes. I just need a little bit of a quick break. And then we're going to carry on with the technical analysis. I still want to discuss Ethereum. Where am I looking for the trade on Ethereum? I really want to catch that long on Ethereum. Okay, and I will update the community as well if I do jump into that trade. So I'll explain it here, but I mean there's a lot of price action that needs to develop to refine where I'm looking for the entry. And remember, if you want to be part of the community, you can send me the word access to my Telegram and I'll send you the instructions on how you can join. Okay, so when I come back, we're going to discuss ETH. Go through some questions. I'm going to chat to you guys if you have any other questions. Like I love these questions where people are asking me, you know, about trading fees and about the D-line strategy and about bluffing. Okay, I love those type of questions because I love to educate. So if you do have any trading related questions, okay, please keep them coming. I will go through the com section when I get back. See you guys in 5 minutes. I'm not going anywhere. I'm just taking a break for 5 minutes. I'll be back.
There's something moving underneath the silence. You can't stop it, you can't see it.
There's a spark you can't control. No face, no throne, no single soul. No crown, no king, no guarded gate. Just coded rhythm, rewriting fate. They don't trust what they can't hold. They fear what they can't control. But every system once began as something small no one would stand. They laughed at fire when it was stone. Now whole cities glow from what was thrown. Every empire starts unseen. Every future starts a dream.
It's rising, it's breathing through the cracks in the ceiling.
You can doubt it, you can fight it,
but you won't stop the feeling. There's an invisible fire burning under the ground. You can't cage the wire, you can't shut it down. We are rising higher, no walls around. What you can't see now will shake this town.
Built by hands that turn their backs. No permission, no applause. No signature from broken laws. They building towers made of glass. I'm building shadows built to last. They measure worth in what they see. I measure mine in legacy. Call it risky, call it strange. Every revolution looks that way. What they mock today is small. Tomorrow stands 10 stories tall.
It's growing, it's glowing, even when you don't know it.
It's silent,
but violent, and nothing can control it. There's an invisible fire burning through the sound. You can doubt desire, but you can't drown the ground. We are climbing higher, feet off the ground. What you can't see now will turn this world around.
I've been doubted, I've been tested. Watch belief get dissected. Watch fear spread contagious fast. But truth don't break it out last. When pressure don't erase the flame, it only teaches it to aim. And when the dark feels permanent,
that's when the spark turns permanent. There's an invisible fire burning us now. You can't pull the wire, you can't shut it down. We are rising higher, we won't bow. What you can't see now will own this ground. It's burning brighter. We're walking through the fire. No walls can hold us now.
Letting that glow from a silent screen. Heart beat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake.
Just want to create a quick poll
Every
here.
risk is a step I take. No applause and no safety net. Just a promise I haven't met.
Here, sits there.
I've been down where the doubt lives
beginning.
Lost in the digital crowd, but the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantees, but I'm on my way. If I fall,
I've obviously been here since the beginning. Right, legends. Let's go through some comments. As Price is getting a little bit of upwards momentum here. Dude, your brother is a master at music production. That first song that played now amazes me as someone who has been producing music for a few years now. Yeah, my brother's been doing it for a while, okay, but he does it for fun. He doesn't do it professionally to sell or anything like that, but he's been doing it for years and years. He uses Fruity Loops and all kinds of, he has recording equipment in his studio. He has a proper studio, a proper sound studio. I love to go there and we make music together. This is the bottom, guys. Buy it. I like your brother's music. One thing besides the obvious I love about you is your damn punctuality. When you say 5 minutes, it's 5. Much love. Yeah, I guess I'm a sucker for punctuality, I must say. Even when I used to work in corporates, I was that person that's 5 minutes there before the meeting starts. If I'm late, I manage people's expectations. I just believe that people's time is their most precious commodity, and I respect people's time. Okay, it's if I'm late for a YouTube live stream, for example, I will apologize in the comment section to say that I have technical issues. It's just something about my personality that I hate being late for things because I respect other people's time. And obviously, in the same breath, I get very upset with people that don't respect my time because I respect people's time. Okay. New fan here. Devil is great. Love his TA. Thanks, Mr. Summer Trade Signals. Great, man. Great. Thank you for the kind words. How can I join the community, sir? You can send me the word access, just the word access, to my Telegram, and I'll send you the instructions on how you can join. One of the ways is you can sign up with one of the exchange partners down below. You can sign up with Bluffin to trade with you. It's your account, guys. 2bit, they also have a competition. Let me just see. It's going to ask me to sign up. They have a competition. I just want to see when this is, if it's going to ask me to sign in. Okay. But anyways, guys, you can go and click on that link. They have a competition starting soon on 2bit. You also, when you sign up with 2bit, you get $30 deposited into your features account. Just by signing up, you get upgraded to VIP status 1. The more money you deposit, the more money gets airdropped into your account. Kraken, Weeks. So if you sign up with one of these exchanges, my links down in the description, your trading fees goes towards unlocking the community and the tools. Okay, you have to hold $500 in your account, and then as you trade like you usually do, a portion of your trading fees goes towards the community and the tools. And as long as the minimum requirements are met, the tools stay open. Okay, please guys, I'm not telling you that you have to now go and expose your cash to more risks, do more risky trades just to get more trading fees. No, that's not what I'm saying. I'm just saying that if you trade like you normally do, you can let your fees go towards paying for something other than just going to the exchanges and you get nothing. Okay, so there's a couple of ways to get in. Right, new fan, love it. Uncle Cyril, being someone with good punctuality is frustrating as hell. Yeah, Cyril, I'm sure you know that I'll be there now. Okay, here in South Africa, now means almost never. Okay, I'll see you just now. You said you're looking to long ETH, not now. It's not ready yet, but I will talk about ETH. Okay, well said, Devil. Time doesn't have value. Time doesn't have value. Love what Devil, as my mother always says, being late is arrogant because it assumes that other people's time is less valuable than yours. Exactly, guys. You know, the worst thing for me is going to an event and you're on time. Okay? And then, fuck, I get so irritated when someone then goes up and says, oh, we're just waiting another 30 minutes because these people are late. And I'm just like, well, what about everyone that is here that is on time? So why does everyone have to wait for a couple of people that are late? So you're respecting the lateness. So you're prioritizing the lateness. You're rewarding the lateness. It's okay to be late. We'll wait for them. Like, it really gets under my skin. Anyways, I signed with Weeks but didn't like it, so can I switch to another exchange? By all means, any one of them down in the description. Okay, it doesn't have to be Weeks. It can be Bluffin, it can be 2bit, it can be Kraken. Okay, I wish you guys would get affiliated with as well. We are having some discussions with additional exchanges because we've had requests from people saying that they want, for example, MiCA compliant exchanges, for example, as well. So Kraken is there. Okay, if you want a MiCA a compliant exchange, this exchange is not allowed in my country. I won't pay money to join. I am from Iraq. Well, then you can pay the monthly subscription, okay? Because another way to get into the community and to have the tools is to pay a monthly subscription. I'm just highlighting that if you do trade with one of my affiliate partners, then your trading fees goes towards unlocking the tools by holding $500 in your account. Okay, you have to have $500. It's your account, guys. You're not giving me the money. Okay, it's your account, your two-factor authentication. It's your account to trade with. It's your money to trade with. Okay, but your trading fees goes towards unlocking the tools. So that's one way. Another way is there's a subscription model behind the community. The trading tools, I think it still needs to be implemented. The only way to get access to the tools at the moment is through one of my affiliate partners. But we are implementing a subscription model there. How much for 1 month? Go and check it out. Send me the word access. Okay. Send me the word access to my Telegram. And I'll send you everything that you need to know. Including what I've just explained over here. It will tell you if you want the monthly subscription, it will. Okay. You will get all the information over there. I think it's $79 a month, if I'm not mistaken, but rather send the word access to my Telegram so you can get the official information. Okay. How much? Okay, I've gone through it. Can you talk to Kane regarding punctuality? The one time I saw him live, he showed up 2.5 hours late. Didn't address the crowd and it all shortened his set to 45 minutes. Holy shit, Kanya. Wow, that is disrespectful. And I mean, you're not even making up for the time. So I mean, guys, if you're paying for my time, let's say you pay for a consultation with me for 60 minutes and I'm 30 minutes late for the consultation, I'll still give you the 60 minutes. I'll sacrifice another 30 minutes of my time because you're paying for it. Okay, you most probably paid for a ticket to go and watch him. No, man. Lol, the food is almost getting ready. King Kai. Right. Remember to smash up that like button. I just want to see how many likes do we have. Okay, is the like button bearish here on this? 207 likes. Guys, if you can, I'm going to set a little bit of a challenge over here. If we can get the likes up to 250, I will stay for another hour. And then we can go through ETH. We can answer some more questions. Okay, I will stay for another hour if we can get the likes to 250. I know we can do it. I know there's at least another 30 likes in here, in this pool somewhere. Okay, I know there's at least. Don't make the like button bearish, guys. Okay. Yeah. Let me make this a little bit bigger. I'm gonna be a pest and ask you again. You have counted BTC bear market cycles a few months ago. What was your count? 34545 from BTC 2017 top. Yeah, as some higher time frame analysis. But before I get to the higher time frame analysis over here, okay, I first want to go through ETH. Will you stay? Anyway, well, we're almost there. We're almost there. We need 3 more likes, guys. We need 3 more likes, ladies and gentlemen. When are you coming to Costa Rica? I don't know. I would love to go there. I don't know. The like button is too bearish. Genius. Yo, Devil, do you ever analyze USDT dominance? I do look at it sometimes. One of the most important lessons that I've learned during my trading career is that I don't have to analyze anything else to make a trading decision on the chart that I'm trading in front of me. William. Okay, guys, we are at 262 likes. I'll stay for another hour. And I love these questions, by the way. When I started out, let me just make sure that the music is soft here in the background. When I started out, I used to analyze USDT dominance. I analyzed total 3, total 2, total 1. I analyzed the DXY. I analyzed the S&P 500. I even analyzed the NASDAQ to try and figure out what I need to trade on Bitcoin. And then a very, very successful, experienced trader. I mean, this guy has 33 years trading experience. Okay. I'm not mentioning this person's name because he asked me not to mention his name. So I respect people's privacy. He looked at me because, you know, I went to him for some advice and I'm struggling, whatever the case might be. He looked at me and he says, why the flippin' hell are you analyzing 10 charts to make a trading decision on Bitcoin? Why are you doing that? And I said, well, that's what you have to do. That's what everyone does. That's what everyone on YouTube does. I see, you know, I follow this person, and then they look at the DXY, and then they show you the weakness there, and then they look at the S&P 500, and then they look at the USD dominance, and then based on all of that information, I can now figure out if I have to long or short Bitcoin. And he just looked at me and he says, you're fucking crazy, man. You make so much work for yourself. And he said, just take your analysis and analyze the chart in front of you. Trade the chart in front of you. He says the other things will fall in place because there's no other chart that can give you a trading decision what you need to make right now in this chart in front of you. You're going to have way less work, way less stress. Just try and perfect your trading strategy. He says perfect your trading strategy on the chart that you're analyzing in front of you. Don't look at anything else. And it's most probably the best piece of advice that I've received during my trading career. I don't have to look at anything else to trade Bitcoin. And I've been pretty successful with that advice. I mean, obviously there was a lot of other things that came into play as well. Okay. But from the trades, I mean, this is just a snippet of trades that I've taken over the couple of years. I've literally just started this sheet on the 1st of July, just from a transparency perspective, sharing with people the trades that I do take and share inside of the community. But I mean, guys, I did not analyze, okay, anything else besides Bitcoin when I took these trades. Okay. So far, the month of August is not as great as July so far, but there's still, I mean, we're halfway through August. So as long as I keep the losses small and the wins big, I think that's still my biggest win, which was on the 20th of July. I tried to beat it over here. I didn't beat it over here. But I mean, guys, money for me is not the goal. Money for me, my goal is to see how little can I lose when I'm wrong. And how much can I make when I'm right? And that's what keeps me profitable. Okay. And I want to show you guys my dashboard, but for some reason I broke the formulas. It doesn't want to update my dashboard. Okay. But yeah, so I'm just showing you guys I need to fix the formulas. Okay. And I'll keep record of this going forward. And these are basically all the trades that I've taken here on. Okay. If I go here onto, there's the one that I was looking for. If I switch on all, because I also keep track of all my trades on TradingView as well as another way of doing it. So you have I have a visual representation of everything that I've done so far, whether I've won, whether I've lost. Because I sometimes like to go back to those trades and see, especially the ones that I've lost. Would I, there's a question in my trading journal that I asked myself especially when I lose a trade. Would you trade this again, given that you've taken the loss? Very important question. Now that you've taken the loss on this trade, and you could replay the past, would you have taken that trade again? If the answer is yes, then you know that it was a trade worth taking. You've just paid your business expense for that trade. But if the answer is no, why are you saying no? Because now you need to delve deeper. You got stopped out. Okay, here's all the trades that I took. Okay, if I got stopped out of this one, for example, let's use this one. The last trade that I took over here, where I got stopped out. So one of my trading journal questions is, you got stopped out of this trade. Would you have taken it again if history had to repeat itself? And for me, for this trade, the answer is yes, I would have taken it again. Because I followed my rules, I checked my checklist, my risk management was in place, I didn't over leverage or over position myself in this position because I followed my trading strategy. There was a reaction at the daily level, price got acceptance back above, I covered my fees, I covered my stop loss, and I got stopped out at break even, if I'm not mistaken. Yes, I got stopped out with $68. So that's one of the trades that I would say that, yes, I would take it again. Knowing that I got stopped out, I would take it again. And I like to do that with every single losing trade and even the winning trades, because sometimes you get a winning trade where you got lucky. You broke your rules, you got lucky, the market moved in your favor, and now the question is, would you have taken that trade again? Because if you broke all your trading rules and you FOMO'd into a trade, and even though you made money, you know that if you're going to do it next time, you're most probably going to lose, or you get lucky again, but you can only get lucky so many times until you blow a hole in your account. So for me, it's a very important question to ask myself is, would you take that trade again if the opportunity presented itself? So yes, for all of these ones, yes, yes. And I suppose the only one where I answered no, I wouldn't have taken it again is some of the fun trades that I took here live on the stream, just for the fun of it, where I told everyone it's not a high probability trade. I'm literally just taking the trade for fun. Something to do while I'm in the live stream. I don't like it, but I'm taking the trade. Those are the ones where I answered in my trading journal, would you have taken this trade again? No. No. Because it wasn't a high probability trade. It didn't fulfill all my trading requirements. And look at what happened. I got stopped out with a loss. So remember, guys, for me, a trading journal is how honest can you be with yourself? Because you don't have to lie in your trading journal. I mean, you have to be as honest as you possibly can inside of your trading journal so that you can learn where you are going wrong. This one was a beautiful one. Nice little trade here to the upside. This one is one that I shared in the community and I got stopped out. Oh, I remember this one. This one was, okay, I need to do this, okay? Otherwise, it's not going to make sense. I need to do that. I remember this one from the 0.382. If I remember roughly, do you guys remember this one that okay, from the low to the high, there was the 0.382. I can't remember if there was another level. I was daily level a little bit. Okay, I took the trade. It might have even been on a live stream on YouTube. I took that trade. Got stopped out with a loss. This trade, I got stopped out with a loss. That one. Yeah, it's that one. Got stopped out with a loss. This one, nice little win to the upside. Okay, you can see. Nice little, I can't remember which, because some of them were running anyways. But loss, win, You guys can see I do lose a lot of trades, but most often the ones that I'm losing, most often I get stopped out with profits. And yeah, I mean, there's been many trades. Win. Okay. But the question is, even if you have a 50% win rate, because I know a trader in South Africa where I stay that has a win rate of 30%, but is profitable. Because 7 out of 10 times when he's wrong, he loses a little bit. And then 3 out of the 10 times when he's right, he makes a lot. So win rate doesn't tell you whether you're a good trader or not. It's how little you lose when you are wrong and how much you make when you are right. So he also just applies the principle of how little can you lose when you're wrong. So managing your risk management principles. Okay. So I know a lot of people, they hammer on this, okay, this win rate. That win rate means nothing. Because you're going to have a win rate of 80% and still lose money. Which means you get 8 trades right, okay, out of 10, just to keep it simple. You win 8 trades, but when you're wrong, those 2 trades when you're wrong, okay, you stuff up everything. You lose all the profits from the 8 trades that you've made. So win rate actually means nothing. So when you start dissecting the information inside of your trading journal, you'll quickly realize that's the one that matters. That green one, that's the one that matters. Okay, that's the only one that matters. The equity curve just needs to go up. But yeah, legends, I often say I don't care whether we are in a bull market or in a bear market. People get obsessed about it. No, we're in a bull, where they argue with each other. I see in the comment sections, no man, the bull market is starting. No man, we're in a bear market. No man, I don't care, guys. All I need is price to go up and down. I can short and long make money, whether we're in a bull market, whether we're in a bear market, whether we're in a consolidation area. So regardless of market cycle, as a technical trader, I can make money. I don't care whether we're in the bull market, in a bear market, from a day trading perspective. From an investment perspective, I would love price to go up. Because that's long term, and I make money when price goes up. I don't make money when price goes down. I make money when price goes down when I'm day trading. Right. Hi Devold, is it possible we can note the trades taken on YouTube live in the community channel, because I cannot always watch the whole stream while working? Thanks. I think, and I guess that is why Andy is inside of the community, guys, because I'm busy on YouTube, Andy's taking care of the community. So yeah, but when I'm not on YouTube, I do highlight inside of the community. Okay. I knew you were from South Africa. Yes, I am from South Africa. Okay, Devold, what about analysis on ETH? Oh yes, let's go get into ETH. So guys, the only short that I kind of find interesting over here is, yeah, this is the short that I'm interested in. 15-minute order block. Because look at what happened at this order block. Price rejected, nice little scalp trade to the downside. So if price continues, I will consider a short in that zone. So now, let's go to ETH. Any day today. There we go. Yeah, it's this one. It's going to be a little bit of a repeat of what I've already said to some of the people. I just want to switch on my magnet. I just want to get this line exactly where it needs to be. And I want to get this line You'll understand now why that line is so important. Okay. So for me, to take a long on ETH, and I'm either going to get it or I'm not going to get it. But I will only consider a long on ETH if the following happens. Otherwise, I'm just going to day trade Bitcoin. Okay, but I'm looking for a swing trade on ETH, a larger trade on ETH. So on the 1 hour time frame, I can see a 5-wave structure to the upside. 1, 2, 3, 4, 5. Nice volume in wave 3, lower volume in wave 5. It makes sense to be a 5-wave structure. Yes, you can go crazy and you can go and count the WXY, ABC, doesn't really matter. But because this is the start and this is the end, regardless of how you count it, okay, that low was made before the 0.382, which is my minimum requirement. After an impulse, I want the correction to finish after the 0.382. So I want a new low to be formed on ETH after the 0.382. So if ETH comes down here, that's where I'm going to start getting into. So only if ETH claims the low at $1,823 will I become interested in a long. That's my first requirement. ETH needs to take that low. Because this correction is too short for this impulse, which means that ETH could form a larger corrective structure, then get the bounce back to the upside, which also aligns with my primary scenario on Bitcoin. So in a nutshell, that is the trade that I'm looking for. You know, I can go and dissect it a little bit more, but that is the trade that I'm looking for. Ideally, I would like ETH to get to the value area low. That's where I'm interested in the trade. High volume. If not this level, I'm looking at this level. If ETH does not take this low and it continues to move up, then I'm happy to say that I've missed it. But because I do most of my trading on Bitcoin, I can be really picky about how I want to trade ETH. I will only trade ETH if this happens. Okay, hope that makes sense. That is basically where I'm looking for the long. Because this could be a A. Okay, now I'm going to create a little bit of confusion. This could be an A. Okay. It forms a 3-wave structure in a B, and it goes up for a C. Or this could be a 1, and that is a 2, and it forms a 3. I don't care how I count it, my trading bias is the same. Even if this is a corrective structure, okay, and this is what I was trying to point out as well. Even if this is some sort of a WXY, 3-wave structure, it's not a 5-wave structure. The connector wave is also too short in time. So let's say this is a W, okay, and this is forming an X. I would also like the X to finish after the 0.382. If this is an A, I would like the B to finish after the 0.382. If this is a 1, I would like 2 to finish after the 0.382. So it doesn't matter for me how I count the structure. I want that low to be claimed again before I will consider a long on ETH. And then once the low is claimed, then I have to figure out, well, where's the best areas of support? Well, this is where the volume range profile or the fixed range volume profile tells me a little bit of a story. So I can go and be a little bit creative and I can say, okay, there's a nice little volume zone over there. There's a nice little volume zone over there. Okay. And then obviously the value area low. It's nice volume there at the value area low. And if it's going to create a deviation to the bottom, okay, you have most probably the 0.7. But then what I also do is I take a fib. Guys, and I'm keeping it simple here. You can see how I combine Elliott wave theory with other trading strategies or other ways of doing technical analysis. It doesn't want to snap onto that high for some reason. Let's try again. There we go. There we go. Okay. And you will see I like to use magnets to snap on my levels so that I know that they are exact. Because I play swing failure patterns, I love to snap on levels with magnets. Not so much ETH because they don't really respect daily and weekly levels as good as Bitcoin. And that's why I don't like to day trade altcoins, because they don't respect levels the way that Bitcoin does. But I will swing trade it because you have a bigger zone in which you're looking for a long. So what is interesting about these volume nodes is that they also line up with Fibonacci levels. You have the 0.382 with this massive volume node. You have the 0.5 with this volume node. And then between the the golden pocket and the 0.7, you have the value area low. I mean, if I have to be really, really picky, I would say, well, that is the level that I want. But I know that there's a chance it might not get there because price can form a three-wave structure and bounce. But at least the low is claimed. Or it does this. I don't know where it's going to bounce, but this is the zone where I'm interested in the long. If ETH does not get there, I'm not taking the long. If it wants to continue up, then maybe there's a different way of maybe, short. Whatever formed here at the top, okay, got invalidated from a timing perspective, and I'm happy to miss the trade. And this is why I'm saying, guys, I'm very interested in a long on ETH, but it has to give me what I want. And when price gets there, I will update the community if I'm going to take a trade on Ethereum. Hope that makes sense. Okay, now I can take that out the way. Bullish case here on Ethereum from this local. So let's say ETH moves up, okay? It doesn't take this low. It continues momentum to the upside. Well, it has formed the only bullish option that I see here is a leading diagonal. This is why I have these two trends here. So basically, you are betting on a bullish structure based on the lowest probable 5-wave impulse. You have a 5-wave structure. You have a 3-wave structure to correct the impulse, leading diagonal, and now you want to see continuation back to the upside. Leading diagonals never carry the highest probability, but it is an option. Ending diagonals carry higher probability. So maybe this is something that ended over here. Ending diagonal carries higher probability, which means the low gets taken. Because this move, since that, this is now what I'm looking at, guys. Since that low was formed, what is that? And that is not an impulsive structure. That looks like exactly the same as Bitcoin. That looks like a 3-wave structure to the upside. Where's 4 and where's 5? If ETH did that, and now it's down here, I would entertain the long because I can acknowledge the 5-wave move to the upside. But for the moment, that looks very 3-wavy here to the upside, which tells me that even if it claims the highs, it's most probably going to come back down. So it has very similar analysis for me than Bitcoin. Okay, I cannot with high probability say that Bitcoin is going to continue up from here. But I mean to claim $67,000, that probability. And based on the structure that I see here on ETH, I cannot with high probability say that it's just going to turn around and move up from here. So down looks more likely. Guys, I can be wrong. And it's not about being wrong or right. It's about having a plan. If Bitcoin moves up, do I have a plan to short? Yes, I do. If Bitcoin falls down, do I have a plan to long? Yes, I do. So whether I'm right or wrong doesn't matter. When price gets to my area of interest, I'll make a trading decision. And I think that's where a lot of people get it wrong. They follow a YouTube influencer, okay, that gets it right, and then he gets it wrong and they unfollow the person and they put hate in the comments because he got it wrong. Everyone gets it wrong, okay? The person should be judged on, did he make money? I like to say that in the community. If you were wrong, if you were right, doesn't matter, did you make money? Because a plan can change. The market can give you something unexpected. If you are liquidating positions and you're liquidating your account because you were wrong, then most probably you should not have a YouTube channel because, you know, you still have a lot to learn. But if you are wrong and your capital remains intact because your risk management protected you, well, that's what it's about at the end of the day, because no one can predict the market with 100% certainty. We can just have our risk management in place to protect us. But I would rather want to follow someone on YouTube that sucks at technical analysis but is profitable, and you're trying to understand how on earth is this person profitable, their technical analysis sucks, then try and follow someone that has brilliant technical analysis but they are not profitable as a trader. If I had to pick, I'd rather pick the person that's profitable, because I want to try and understand, why are you profitable? Because that's the end game, is you want, you know, to be profitable as a technical trader. What have you mastered to make yourself profitable? Not, oh, sexy, fancy technical analysis. Wow, I wish I could do that, but you don't know how to do risk management and therefore you're still a losing trader. Okay, you know, or in break even, or whatever the case might be. So that is the technical analysis on